Good morning. October 9th. Hope you guys had a good weekend. It is Happy Money Monday. We've had a good morning, are well rested, ready for the day. We're going to be streaming stocks, options, futures trading, watching the SPY, watching GME, AMC, GNS, whatever comes around, like volatility. Sub up, like up, comment down. Happy Money sticks around. You can follow us on Twitter at HappyMoneyYT, as well as our Discord server link for those in the description. And I'll put a Discord link in chat as well. Had a good weekend. It was seemed long, which is kind of nice. Coming back refreshed. So Hamas has been attacking Israel from the Gaza Strip. Happened over the weekend. Little gap down from the markets, most likely because of that news. SPY's down 0.4% here in pre-market. GME down 1.25%. Oil and gold, I think, have been ripping. There's that news as well. This week we have some data. Let's see, Fed President Logan speaks today. Speaking it right now, actually at 9 o'clock. Fed Jefferson speaks at 12:50. Tomorrow we have wholesale inventories, and then optimism index. And then Wednesday's PPI, core PPI. So that could definitely move the market. Thursday initial jobs claim, and then CPI on Thursday, Friday import price index. So potentially market moving data this week. Very potential for some volatility. And after last week, then that Friday rally begin. I think we have a likelihood of filling some gaps up here. This one, maybe this one if CPI is down, but I'm not biased one way or the other if it'll be down or up. I don't know, or down or up, but based on expectations, I guess. I don't even know what expectations are at this point, but yeah, I'll have to find out. So why do you have barbecue in your title? There's a question mark after it. But yes, it isn't traded anymore. Barbecue shareholders are still shareholders of a shell company with NOLs. And potentially they're going to be coming back with equity in a new company. Maybe private, maybe public. And I have the title because something we can discuss if there's discussion to be had on the matter. About 2 minutes to open here. I'm trying to take it slow. Oh no, these day trades on SPY. No rush. No rush on the week. Friday actually wasn't a very good day for me. The rest of the week was pretty good though. Which is funny. Friday had the potential to be the biggest day, but I just didn't trade it quite right. So, here we are, Monday. It is funny actually looking at the chart, how small the movements were on Wednesday and Thursday and then Friday, and these days they did much better. Position sizing is very important. Alright, there's the open. We've got BBBYQ up 300%, which Doesn't mean a whole lot. Need a penny stock now. Markets are waking up, and GME is opening up down 2%. AMC's green a little bit. Hoping for a little pullback even, but I don't know if we're gonna get it. I think it's ripe for the rally. A lot of stuff is still sleeping. You wakey. S&P's up 24%. CTOO 14%. New high there on SPY. A pretty ugly IPO there for savers. Bad time to IPO. When he gets a lot of random penny stocks are up on top of my watch list. Liquor House down 26%. Oh, what do you know? They sell more shares. What is this? Draft registration statement. Liquor House general form for registration of securities under the Securities Act of 1933. What does this mean? I don't know what that means. Will this be the quickest IPO to bankruptcy in history? Perhaps. GNS is down 8. DCL down 5. I did see that, like, I'm not sure what that means. Pretty ugly though. Delta down 5%, JetBlue down 5, Datadog down 4, Open down 4. GME 1.5. AMC up 1.5. Yep, it's ready to keep ripping, it looks like. Gaps to be filled. Resistance here at 9.94. I think we might keep going before it has a much of a pullback. I've got calls for next Friday. They're still down. Nine Energy is up with oil, seemingly. Yep, oil's up. USO's up 3.5. Like some values up. We've got AT&T up, Caterpillar up, MO up. Share buyback program in the beginning, ended up doing an offering. Is that what the sell-off is from? They're saying they're gonna have a share offering already? I didn't understand the news. It says general form for registration of securities under the Securities Act of 1933. Is that a share offering? You'd have hoped. You got some pointers from his buddy RC on how to run a public company. Is consolidating in this chop. Considered getting calls, short-dated calls on SPY outside the daily ones, but like swing, maybe like January's or December's, probably January's for this bounce. But at the same time, I'm also definitely in a bearish trend, so I just wait for the bounce and add back into my puts. Too high there on SPY. Did you dig deep to find it? I mean, I'm seeing some media on it right here. On Liquor, the press release at least. You can view the documents. Draft registration statement. bonds down 2.25. Still holding up pretty good. First solar down 2.3. Got 67 days on those puts. High down 2%. Look at that VWAP. Doing the AC/DC. Dish. Dish is flat. New high there on SPY. Dish is at 4995. Goes up 2%. This year has been quite the accumulation, consolidation. Jones sucks. He's down 3.8. Lucid's flat. SPY ripping up there. Volunteer rallying. Is that because of this war? Because of gold? Interesting. Rivian still hasn't filled that gap. Rad is up 3%. GME is flat. AMC 3.5. Wow. 15 minutes from open. Buy is down 0.23%. Still in this gap from weekend. Lockheed Martin up 8.3. AMC almost 4% there. Oh, Palantir is kind of defensive too, I guess. Probably why it's ripping. I grab a couple puts there. What? Oh, it's banking day. My funds haven't settled. Shoot, they not settled on anything? Didn't think about that settlement. Yeah, I wasn't thinking about that. I can trade with my other, my backup account. Those aren't dailies, so. And I'm assuming, it's hard to tell in Fidelity, but I think my buying power must be less. This is probably adding in what I used on it from Friday as well. So, it's good, it's forcing me to only take the best setups, maybe one trade today. That's what I'd like to do. One solid setup. Bloomberger. No new news on RAD. Buys below VWAP there. Just chopping around still. No VWAP chop. Shouldn't need settled cash to close puts. To close a position. Beyond is down 1.5. You're high there on SPY. High rallying. You bought unsettled funds. Ah, I see. That makes sense. Right. AMC run up, crash down another week. Yeah, maybe. How high does it run before then, though? Just broken this resistance. Broke out of this bear flag with volume. A lot of gaps it could fill to the upside. As easy as it comes down, it can go back up. Your orders were canceled over the weekend? Top's up 4.3. What are you doing, Top? Eli Lilly, 2.5. New high, in on SPY. Teladoc down 2.25. Dish down 1.6 now. It's base down 5.3. Run down 3.5. Coming down here a little bit. Just in VWAP. A breakthrough VWAP. Let's see who holds this channel. SPY did not hold that channel. I'm down some more here. If we get an inverse cup. Thanks, Christopher. Yeah, we're 35 minutes in. Appreciate you guys joining. Hope you're having a happy Money Monday. Hope you had a good weekend. Got 5 thumbs up on the day. I don't think anybody would have settled cash, no. GME is down 1.5 with that move. Load AMC down, up 1.3, back to VWAP. LMT up 7.5. Yellow up 14.5. AMC coming down a bit. Still green. 27.3. 12 first circuit breaker. Nice. What's GNS doing? GNS is down 3.7 now. Just above $1 though. Holds that for support. Fly bouncing back up here to VWAP. There's a VWAP test. So they couldn't complete the inverse cup. Oh. Could still be bullish. VFS continue to get plummeted.
I see as far as where we stand with stocks after what we've been through. Even 5% short-term rates are not at a historically high level. We're still not even to the median level.
Yeah, I made it through 670 people at the WSOPC this weekend in Indiana. I needed your aces for the last 53 of those people, Alan. So thanks
Aces
for teasing
are
me this
not
morning.
bad. Let's remember that.
Yeah,
Ace
300,000
data
jobs is the
bad.
aces of the economy, right?
Right.
Okay.
Exactly.
Your trade this morning goes a little bit
guy's a
tech.
poker player.
I like this because it fits your
Right.
optimism. UiPath is connected to some of the VR stuff and the AI stuff. Why did it cross your radar this morning?
Well, it crossed my radar because I'm seeing some leverage buying in the options market, which is a sign for me. I'll tell you about the technicals in a second, but in the big picture, the Qs
Spot didn't
have
fill the
had
gap
two
yet.
consecutive positive weeks. So they made their lows 2 weeks ago, their swing lows, and they built on it last week. So that's very positive. And if you look at Meta, Google, NVIDIA, and Tesla, they all had a great Friday, and that may be the little bit of a turn that we need to build on to see the tech sector take off once again.
CRISPR.
So looking
Remember
at this
CRISPR?
Stock, this stock's been between 10 and 20 for a year. It's 70% off the 2021 top, so it's making a bottom pattern here. It's holding this 15 level, which is the midpoint of this range. It's also the 200-day moving average. So there's a lot to lean on this 15 from a risk reward to see if we can get it back up to that range top at 20.
Got it. Okay, so you're thinking it's going to bounce off this moving average, basically. I mean, it's a pretty good-looking chart, right? It's kind of in the middle of a turnaround, arguably.
Right, and again, my indicator that I see is a money flow indicator, and money is flowing into it, and they're using options, which is a very bullish sign because intelligence will use the benefits of options because you tie up less money, less risk, and you have a greater return. So I'm following the money here. I'm looking at the February 15 call. Again, that's the baseline midpoint level here. The 15 call, trading for about 3 or so. It's nearly $2 in the money. It's got 4 months of time, a 75 delta. And if we just get back to that range top, a breakout of the range target is 30, okay? But if we just get back up to the range top, then this option will gain nearly 100%.
Okay. So the big money flows behind it. You're looking at what options without, I mean, you don't have to give us your secret sauce here, Alan, but that's just what you're looking at big size?
It is a secret sauce. It's not just unusual option volume. It's a measurement of the increase in open interest and the bullish option buying. Tells me that typically it's not going to be retail traders that are building big positions in options. It's going to be someone that has some market knowledge and some market experience, if I can say that politely. Okay. So I'm just going to follow the big money, and this is an indicator that I've used. It's a patented indicator that I'm associated with, that we've been using for months and years, and we've talked about how I've gotten into positions that see this option accumulation, because to me that's a tell. Combine that with the technicals and buying the in-the-money options and buying time, you put yourself in position for success.
All right. So you get out of this when new highs, you get to 20 bucks, you say, okay, good trade?
Well, again, that's not new highs. We're still, that's new year highs. But look at a 5-year chart, and your eyes will. We got
up above VWAP now.
Upside potential on this stock, but I always put in money management rules with my options that I get out of half my positions at 50%, and then get out of the other half at 100%, because trading is very methodical. It's not fun. It's not exciting. It's methodical. Making money is fun. Identify, execute, manage, maximize, and then repeat. So that's what we try and do here.
Got it. All right. Thanks for the trade, Mr. Yuckman. Appreciate the convo.
Thank you.
You got it, Alan Yuckman, Bullseye Options. All right, when we come back, let's talk some ETFs. Going to check in with a few of the big themes in that asset class, but also connect with this morning's discussion. Stocks trying to
usually 5. I've been watching the 1 minute the last.
Some pressure, but
I don't know.
List of big tech companies
Been going back and forth. 1 and 5. Been watching one more though, more recently.
You're still missing Apple, but it's within about 20 basis points. Tesla, Amazon,
I've been day trading it more.
Farther down about 1.5 to 2.5% or so. So there's definitely some work to be done here by tech bulls if they're going to turn this thing positive.
Wow, JetBlue has gotten wrecked. He's come down so much. Just from strikes and stuff. Crazy. BRCC has been selling off pretty bad. All the airlines. Is oil too, maybe? Bit of a head and shoulders here on SPY. Black Bear continuing to sell off. I think this is probably because they're going to spin off or whatever. Pretty choppy this morning, really. Not a whole lot of clear action at all. Had one little trade right here on the put side he could have taken.
term, again, because a lot of the tech stocks have exposure more to business spending in the US and Europe and so on. And in fact, if you look at the energy sector, as we know, Israel is not really an
See if SPY makes a double top.
even though it's in an oil producing region. Energy only makes up 2% of these ETFs. And so
that's interesting.
Yeah.
Yeah, to your point, I mean, we kind of, obviously we think Middle East, we think oil, which is true, of course, but in this case, for the actual linked ETFs to this region, it's probably going to be a fairly minimal impact.
A direct impact will be minimal. I think the question is there, I mean, obviously Israel is a very important country geopolitically and so on. And so the question is, if this continues for some time, what does it mean for energy? What does it mean for the dollar? And so on, and gold. I think those are kind of the broader implications.
Got it. Okay, so from there, let's kind of make our way into some of the other macro themes that we've been tracking this year that are a little bit more prevalent. The dollar being one of them, strength in the dollar coming back these last 3 months. Still well off the highs, though, and a Fed that may or may not hike at this point. So what do you see when you look at some of the currency ETFs? I mean, is there anything gaining ground on the dollar?
Well, the dollar's been much stronger than we expected at the beginning of the year. If you recall, last year, the dollar was up 12%, I mean, relative to a currency trade-weighted basket. I'd say that what's really interesting from an ETF investor's point of view is looking at currency hedged ETFs. Especially markets which rely on exports, where the local currency is weak, and then you offset that weakness with some kind of hedging. Those are really attractive trades. If you look, for example, at Japan, a currency hedge ETF is up about 30% this year versus unhedged ETFs, which are up only about 10%. So you're talking about an almost 20% performance differential between dollar hedged and unhedged ETFs. HEWJ is up about 30% this year because the yen's, I mean, the Japanese market's done really well on the back of a weak yen. And so really, we think
Volunteer up 6.7.
The first half of this year, currency hedge ETFs didn't take in much money, probably because investors didn't think the dollar would stay strong for this long.
Yeah, it's a defensive.
They've kind of come back
Forgot that it relies on that.
into this category in the last couple of months. And I think now, given the possibility of a rate hike, or at least rates staying high for long, a strong dollar may be here to stay for some time.
Has that correlated to any exodus from bond funds, the higher for longer regime? What do you see when you look at the general treasury funds this year on account? Any notable movement or folks keeping heads cool compared to last year?
What's surprising is that we've seen a lot of inflows in demand for
this
bond
head and shoulders
ETFs
setting
across
up.
the kind of maturity spectrum.
Grab some puts on a
We
break
would
of this
expect
channel.
Obviously, more inflows into the shorter term bond ETFs, but surprisingly, ETFs like TLT, for example, which hold 20-year treasuries, have actually been one of the strongest performers in terms of flows, despite being down significantly this year. And certainly, if we see this Israel conflict and so on persisting, I think the demand for bond ETFs will persist. So that's been one surprise, a little bit of conundrum that despite being the possibility of a rate hike, there's still demand for kind of longer dated, bond ETFs. But we do expect bond ETFs to continue to be strong this year in terms of flows. So even though it's a little unexpected, we do think that ultimately just bond ETFs being a safe haven will attract flows through the rest of the year.
Sure is looking like it this morning. Bonds really rallying hard. One of the bigger bond rallies we've seen since the spring, really. Maybe a couple days there in August. So it's a pretty big move here for bonds. TLT up almost a full percent. That's a pretty big move for TLT, right? Percent?
Right. Yeah. Exactly. I mean, it's been a challenging.
Okay, I got him.
Investors holding TLT in the past,
yeah.
But yes. Today.
All right, a little bit of relief. Yeah, it barely shows up when we zoom out a little bit. Hey, two wild card subjects for you on a cat, about a minute each if we can. Crypto and China. At one point connected, maybe not so much anymore. From the macro side, let's talk China real quick. Do you see some interest and flows coming back into this region?
China, of course, is still, I mean, we've seen maybe a slight turnaround in the last month or two, but what we've seen a more interesting trade is really emerging markets ex-China. There's really short-term reasons here. Of course, we know China hasn't performed as well as we expected coming out of the COVID easing, and of course, they've had property issues and so on. But there's also longer-term issues, the fact that companies may look to diversify supply chains and so on. So ETFs like, for example, EMXC, which is Emerging Markets ex China, have actually done really well this year. I would say maybe 12 or 13% better than pure China ETFs. And so that differential is driving flows into emerging markets ex-China strategies. There's much higher weight to countries like Vietnam, India, and other countries that may benefit from some of these changes in supply chain. So that's one trend that we've seen. On the crypto side, as you know, a big event a few months ago was Grayscale winning its lawsuit against the SEC in its bid to kind of convert GBTC into a spot Bitcoin ETF. Since then, the SEC has also
Take profits.
Ethereum futures.
I'll start at this channel.
Currencies, and in fact, if you look at the best performing ETFs this year, surprisingly, it's actually been crypto ETFs and fintech ETFs. So
wow.
We'll see if it's here to stay, but certainly it's been a good year for those people invested in crypto.
If we don't break out of here, we're just still stuck on a chop.
So the interest here continues to build, and it kind of looks like we're fighting for maybe some new highs here. This is maybe an anticipation of the spots coming around. What impact do you think?
GME's down 2%.
I mean,
AMC's now red.
Other ETFs and trusts, I mean, futures based and stuff. I mean, we had the ProShares team on last week. They're real excited about their futures ETF, and look, it seems like a perfectly fine product, but push comes to shove. I mean, I think most people would go for a spot if there was one.
Oh, definitely. I mean, I think there's certainly going to be much more of an appetite for spot, even though we've seen actually the futures and spot trade very close to each other. So from an exposure perspective, they're tracking very closely. I think it's more the comfort of being able to get in your brokerage account, the fact that it's going to be SEC approved if it is, and so on. I think those issues come into play more. And so I think we expect the demand for a spot Bitcoin. If spot Bitcoin or spot Ethereum got to market, I think that would certainly drive demand for those products.
Okay. Okay, great conversation. Nice job hitting like 5 different subjects for us succinctly and clearly. Appreciate it.
Sure, thank you.
Yeah, good stuff. Aniket Ulal joining us from CFRA. Coming up, let's talk some charts and get ready for earnings this week. Pepsi and Domino's have been Ozempicked. I'm going to try and turn that into a verb. Maybe not Domino's so much. The market's been generally excited about their delivery partnerships, but they still got slammed in the last week alongside all the other stuff that you crave. So we'll talk about the charts and the sell-off in some of those consumer food businesses ahead of earnings this week. Then we're going to take a look at JP Morgan as well, which has been the king of...
It just looks like typical volatility to me on Finger. I mean, look at this thing. Got a big range. I don't like the chart. Big range accumulation. Might come down a little bit. See if it holds this channel or breaks. Breaks. Should see low of the day. Or an inverse cup completed. And maybe a little bounce. Or maybe just kind of keep coming down since so much liquidity was already built. Took a little profit there. Channel break right there. Okay, I'll close another one at low day.
The big acceleration to the downside has come roughly within the past week or so, since right about here, since we broke below the lows that we established after that move up near 377. Big break downward, a bit of bouncing around, another big break downward once we broke through our purple 252-day EMA. So these moving averages can be very important to look for support and resistance. A close above or below them is worth noting usually. So we can see here, now 350 is the level to watch here today to see if we can break above that point. The move downward stabilized near 332, this green dashed line here. You can see that was some lows, some highs once again, and it was also roughly the volume profile point of control, the area of heaviest trading on our chart here. So you can see as well, momentum was oversold. We're backing out of the oversold area. That could easily slip back down again today, though, if this move up starts to falter a little bit here. Wait for the close when you're making decisions based on technicals. Fake outs are common. You don't want to be jumping the gun, so to speak. And we can see here, so once again, got our standard deviation channels. The move down stopped right at the -1 channel, so which also coincides with our volume profile point of control, which is also our support area that we noted here. So 332 to me looks like it could be very important to watch as we watch this stock in coming days here. If we keep going to the downside, 314 based on our old highs and our post-gap lows there. To the upside, this area right here, our 252-day EMA and our linear regression line on the year, 360 to 363 or so is a resistance zone to watch.
All right, nice, like that. Okay, pretty clearly defined levels here, which always makes it fun for dominoes. So, 330, hold on pretty well. Maybe a little retest of that 363, 50-ish area to see if it was, the real deal breaking down the way it did. So some gappiness though. So I mean, this is going to be
Bears can
potentially
bring it down to low of the day.
Even though Pepsi's was just like this
Or we get
collapse
too big of a
very
bounce to
fast,
stop me out.
Domino's has had a little bit more of a two-way trade kind of mixed into it, especially with the bounce here today. So a fairly nuanced chart there. All right, last one. At the end of the week, shifting gears here. I don't think Ozempic has a role at JP Morgan. Jamie Dimon looks like he's in pretty good shape.
Few companies have the potential to move the overall market when they report as much as JP Morgan. Doesn't always deliver on that promise, but Jamie Dimon, a well-respected leader of the financial world, and of course one of the biggest banks on the planet as well. So when they speak, when they give you the numbers, the market listens. That'll be no different this week. EPS looking for about 25% growth at 385. Revenue 20% or so growth, just over 39 billion, just under 40 billion, about $39.1 billion for that revenue. Evercore last
today might
week
just be choppy.
The price target
the bank's being closed
from 158 and kept an outperform. The reason I bring this up is on average within this they talked about how they were actually cutting for brokers, banks, and asset managers, and average their EPS estimates for the quarter by 6%.
And he goes to work at 9:30. Gets the same.
So they're saying it's very unique.
A well-respected man about doing the best things for
the way I would look at it. On average, cutting by 6%, yet you're hiking the price target on a member of that sector. I think goes to show volumes how they feel about this company.
Well, the stock's kind of proven itself here by holding on for the ride despite some maddening ups and downs for the financial sector this year, Rick.
Holding on, but we had a bit of a scare on Thursday last week here. You can see this 143 level, this green dashed line, frequent ceiling for price here. Then we broke above it. We culminated with our yearly highs near 159. Then kind of a falling wedge type shape has taken place here. We broke below that line, that key line that I mentioned earlier. Now we're kind of sandwiched in between our moving averages. The moving averages are starting to trend downward. The trend is degrading here. Our RSI trending downward in bearish territory here. Nothing really too crazy, just kind of following the price action here. But, support and resistance, the places to watch here would be our 252-day EMA to the downside near about 140.44 or so. So kind of a place to watch here, pretty close to our downward sloping trend line there. To the upside, similar situation. Our 63 EMA is on top of our upper trend line near about 146.60.
Okay. All right. So JPM
a slightly better entry.
143, it seems like, and ideal for bulls would be to get above those moving averages to 145. So some good levels for us. Thanks, Rick Ducat. Very nice look at the charts. Alex Coffey with a good preview of the earnings. Nice work, guys. When we come back, going to get an update on a tech name on semi as we return to some or rather shoes.
Can name a song. Name a song hour. 10:45. Hour and 15 minutes into the Happy Money Monday. I mean, I kind of told you, but because he gets up in the morning and he goes to work at 9 and he comes back home at 5:30, gets the same train every time. Because his world is built around punctuality, it never fails. And he's oh so good, and he's oh so fine. Huh? Huh? Acapella? Come on. GME down 2%. He's red. Just a little bit. SPY did not stop me out, so that's beautiful. I was like 3% from getting stopped out there. 3% on an option is like basically nothing on a daily. Well, it's actually tomorrow's, I guess. That helps. Okay, see if we can complete this inverse cup. No one, huh?
Cause he gets up in the morning and he goes to work at 9.
Uh-huh. Okay, closed one. Nice flush with low day, actually. Flush. Check the bottom of the channel. Maybe I'll just wait for pre-market low. I like it. So stoked I didn't get stopped out there. Would have been very sad.
right now. It looks like a market that's going to be range bound from 42.10, maybe up to 43.50 until our earnings start at the end.
Let's draw that data this week too. Spy's probably not going to make
that
crazy moves until then.
Banks, but have a few mixed in as well with Pepsi and Domino's. We were talking about just a few moments ago. Nick, what to you should be the focus here this week? I mean, I guess we could argue CPI, but bonds managed to stay bid through a red-hot employment, so I don't know.
I don't know.
Yeah, I think CPI and PPI are certainly midweek here. Barring any other massive escalation in the Middle East, I think those will be the biggest kind of early week drivers. And then obviously the earnings stuff, guys, is huge, right? There's an interesting sentiment out there that this could be a pretty painful quarter from a guidance perspective, right? And if we start to hear that CEOs and CFOs are out there talking about earnings warnings going forward, I think that you can start to see analysts paint a little bit more of the glide path isn't exactly towards soft landing here. The glide path is more towards grinding towards a recession, because if we get earnings slow down and some of these numbers are still hot from an inflationary perspective, I think that's becoming a little bit of the bear case. Certainly not, it's not the only potential outcome here, right? But we've definitely got a little bit of concern there. And I think hearing from these companies, and if there is sort of a sentiment towards pressure on earnings, I think that could be a little bit damaging. I'm also interested in the small business index tomorrow morning. Not a huge market mover, but I always enjoy reading that because we've seen from this unemployment data that large companies have shed jobs. We know about the strikes going on everywhere. I'm interested to see kind of what the small business take is here. I always kind of, every time this report comes out, I'm always saying, small to medium businesses employ over half the people in the country. So they don't get the sort of stock trading press, but I'm interested to kind of understand what's happening there from a labor perspective, and if the pressures are still as strong. And that survey is really about sort of the owner's optimism. And I think that's going to be interesting tomorrow morning. So those couple of things coupled with earnings, and obviously we'll keep an eye on energies and the tensions in the Middle East, I think are the big drivers for me going into the week.
Yeah, true. Like the survey as well, actually, that you're going to be watching for. Hey, Joe, real fast, thinking about Fed commentary, do you think they are going to skew any particular way? It seems like so far they're pretty comfortable without hiking.
I think that's status quo going forward. I think Friday you saw the probability of a hike in November get around 25-30%, and I think what happened over the weekend probably pulls that back a little bit. So I think the Fed is probably on the path to sit still for November and December, and then kind of recalibrate and see where they're at.
Yep, give us that.
I think they're okay.
The
with
Indy
that.
rally.
The market should be okay with that as well.
All right, thanks guys, good stuff. Nick Dudrakis, Joe Mazzola, appreciate it, gents. That's it for MTL. Thank you for joining this morning. Trade PC and Nicole Petalides is up next.
GME is down 2. AMC is now red 0.5%. If this 9, 10 area can hold. Still in most of my SPY puts. Take some more profits on this channel. Probably low of the day. Then maybe this low down here. But need to leave one for the homies. Even though I don't think we're gonna get a continuation day like we did on Friday. A huge red candle. It's the principle. Creating good habits. Aliens priced in. Aliens be bullish.
Commodities go up. You see that in stocks, you see that in crude oil today. So uncertainty around the market, fear of escalation surrounds this market. That being said, U.S. stocks somewhat resilient going into this day, down about 0.5%. So all things considered, that this is not a catastrophic move, but it's something that we feel is not going away.
GNS popping up there. Up 4.8.
Yeah,
wow.
Without a doubt.
I was down like 7% this morning.
People are at work today trying to navigate. For example, we saw defense stocks. Defense stocks were taking off. Right? Oil's moving higher. We are seeing direct correlation here in the markets today. As I look at the 10-year bond yield right now, 4.79 is where that is. Let's get to some stock stories.
Sure.
Right, Tesla. The vehicles in China lower than expected for the amount that were made there, I believe. Tell us more about that.
U.S. automaker Tesla, 74,073 China-made electric vehicles. Nicole, that is a 10.9% decrease from a year ago or a year earlier. And this is a number that, combined with the miss
11 o'clock.
U.S. deliveries, sets a tone.
Have you liked
Tesla's
this stream yet?
Coming up here in a few weeks that may be
thanks to the 9 of you.
Now, Wells Fargo came out and lowered their stock price, their target price from
GNS is up
265 to 260 keeps an equal weight rating, but they think as Tesla lowers prices that the margins could be what gets hit, Nicole, from 17.9% down to as low as 16.3%.
A little bit
Still
here.
Pretty good margins for a U.S. automaker, but lower in terms of Tesla's margins, Nicole.
Yeah. Understood. What about what's going on with Disney? Nelson Peltz.
Happy Money Monday to Katie Daddy.
Back on.
Nelson Peltz has about a $2.5 billion stake. Trian Fund Management has about $2.5 billion stake in Disney. Earlier this year, Nelson Peltz tried to get a director seat. He was rebuffed by Disney, and when they came out with a major restructuring, he canceled that and went away. Well, he's back, Nicole. And
he's back.
To put it lightly, he's expected to request multiple board seats, including one for Nelson Peltz. He says if no, Trian could nominate directors voted on at the next Disney meeting. So Nelson Peltz and Trian Fund Management went away for a little while. Now they're back. Why? Well, Disney sits at or near the lows. It's had a nice bounce the last couple of days, up about 0.75% today, but it was much higher earlier this morning, Nicole. So a lot of pressure on Disney, and as you know, way off the highs that were over $200.
Right, understood. All right, thank you so much,
Yes,
Kevin
ma'am.
Hicks. Good to see you. Appreciate it. Let's get some insights in the news shaping the markets. For that, we welcome in David
Cole with
Scranton,
the
founder, CEO,
throwback
Sound Income Strategy.
shoulder
Thank
pads.
you so much, David, for being with us. Obviously, this is a first look at our markets, the reaction that we're seeing as there is
volume.
war in the Middle East. Much of what I would expect to see, right? I mean, a sell-off, some concern on the uncertainty and oil taking off. What stands out to you, and what's the interpretation for this week ahead?
Well, one of the things that stands out is being a bond guy at my core. When something like this happens geopolitically, you'd expect kind of a flight to quality. So you would expect that the yields on the 10-year would drop maybe 5, 10, 15 basis points. And that hasn't happened. So, the interest rate environment seems to be resilient, perhaps a continuation of what we had seen over the last few weeks. So I think that it seems like even if this hadn't happened, perhaps we'd be waking up to a 10-year at 4.85 or 4.90.
I got it straight.
Who knows?
I did got it straight.
Before the upcoming
Beautiful.
Fed meeting, which is coming up in a few weeks.
Yeah, look, with the bond market closed today, what kind of volume do you expect tomorrow?
Yeah, I think with what's going on here, I think we're going to be we're going to hold stable for a little while.
I added my puts on a channel break there.
That kind of buck the trend we've seen with these increasing interest rates over time. And the markets, the markets are the markets in terms of equities. We've had the third quarter of the year where all of a sudden the NASDAQ route kind of stopped. We had a great second quarter for all those tech stocks, the top 7, as well as the NASDAQ in general. And in the third quarter, because of the increase in interest rates, we saw the NASDAQ drop more than the S&P, and the S&P drop more than the Dow. So I think right now, if there's still upward pressure on interest rates, we're going to see that continue.
Yeah. As you talk about flight to quality, I mean, European stocks were down, U.S. stocks are down, and we are seeing a flight to quality, at least in part, to the U.S. dollar, the yen, and the Swiss franc. Not surprising to you, but what does that mean for investors?
Well, it means that, all the concern about, are we going to pay our debts, or, government shutdown and so on, the world still looks at us in spite of the political theatrics that had gone on in Congress and that are likely to continue going on at least till November 15th. The world still looks at us as the safe haven when there's times of turmoil. And right now we have lots of times of turmoil, right? I mean, the Israeli news is new, but I mean, even before this, we have serious concerns about China. We have, of course, concerns that linger about Russia and what's going on over there. But still, the dollar seems to hold strong in light of Congress's theatrics, should we say?
Yeah, as gold is up $20, theoretically another flight to quality there. What do you tell investors? What's your investment advice between now and the end of the year? I mean, you've had, obviously, you have a dip today. The Dow is down 5 weeks in a row. The S&P actually had a winning week last week. But overall for August, September, October were lower. Are there buying opportunities, and if so, for what?
Yeah, I think you've got to be careful in this type of environment because the question is, okay, we're going to have this soft landing, or are we not? Are we going to get into a recession eventually? I mean, certainly inflation has started to come down, and real estate's a big concern. You have mortgages around 8%. I mean, a lot of people just can't afford to buy homes at that. Those prices have to start coming back. So you've got to be careful. I would tell people this is not a time to be out there indexing. This is a time to be picking individual securities if you're a stock picker. The defensive stocks hadn't done that well over the last couple of months, but I think that it might be time to own some more of the defensive stocks.
Just these simple times.
And I still think it's a great time to
Thanks,
lock in
guys.
some longer-term yields. Some yields can go over 5%.
Such simple times.
But if you're buying bonds or preferreds, what you have to realize is that if the long-term yields go from 2 to 3,
The bottom guy,
that's
yeah.
a percent increase, but that's a 50% increase in yields. If yields go from 4 to 5, sure, it's 1%, but it's only a 25% increase. And that's why many bonds, corporate bonds, for example, have held pretty stable, even though interest rates have climbed significantly over the last couple of months. That is, the 10-year yields. Because, again, the percentage increase as you go higher isn't as significant. And also, there's been a tightening of credit spreads. So I think we're getting close to a time to lock in some good yields for investors who've kind of shooed bonds for perhaps decades now.
Yeah. Look, the Fed's still waiting on data. We got in this incredible jobs report on Friday. Really wowed everybody.
She had a hand.
And that
What do you
being
know?
said, the CPI, PPI due out this week for inflation. What are you going to be and earnings on Friday for these banks? What are you going to be watching for, and what do you think the Fed does next?
Well, at this point, we're just watching for things not to go higher in terms of inflation. We
I
always
did
talk
add to
about
this
how
puts
big the
there.
lag effect is
Close
when the Fed raises rates
some
in
at this
terms of
low.
curbing inflation.
Put a stop loss in the
And,
rest, just like my other
we're
ones.
Still, that could be 9 to 12
I
months
got
after the fact, and
427s
the Fed
since
has made
down.
significant number of hikes this year alone. So I think we're just looking for those numbers not to get any
We
higher.
are coming up
If
to
they don't
EU
get any
close.
higher, that'll be
I was
a
going
good
to maybe the
sign.
chop,
And
more chop
especially what's
hours,
going on geopolitically.
less volume
And
even.
the Fed's got to have the banks in the radar. I mean, that's been, radio silent since March, but the banks still have to have their radar, or the Fed still has to have the radar on the banks. They don't want to see massive bank failures that they have to bail out. So I think as long as things don't get worse, the Fed is likely to hold when they meet coming up just in a few weeks.
Okay. David, great to see you. Thank you. At
Great to
Sound
see you too. Thank you, Nicole.
Strategies, David Scranton. Thank you. Coming up next, it's the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein goes to the technicals.
Lichtenstein.
Moore takes us through the trades for Netflix, Intel, and Roblox. That's coming up next on Trading 360.
I rallied a bit here. I'm assuming they have a full house. Oh, they have nothing. I had a kicker. A higher kicker, so I would have lost anyways. Thought he might be bluffing, but Ugh. Wait, I didn't have the full house. I did. Oh, I did not. So fast. A bigger raise. One's got clubs in there. Clubs? Clubs? Yes. Oh, that's funny. Spy ripping there. Dang, dude. I'll stop out of my original ones probably. It's very controlled. You closes in 12 minutes. GME down 1. See back to green, just barely. 27. But I had a full house again? Oh my goodness. I think it's looking for VWAP again. About to get stopped out of my 428s. Could have called that, but yeah, I think that's the stop right there. No, not quite. I think it wants VWAP though. You got stopped out of those. Choppy day. My other ones I'm holding, which is maybe a mistake. We'll see. If we break this channel the upside, we'll close them. Probably get some calls.
Swift move off there. Taking a look here, and the other reason I'm giving the benefit of the doubt to the bears, taking a look at the weekly candle chart. I mean, this really says it all. Look, we were trading up around 60, 70 again back in 2019, and you can see some of the movement, the larger ranges that we're looking at here. You can also see the high conviction of the downside, the separation, the vertical nature associated with price activity, and how after bottoming out last fall, again, not a lot of conviction one way or the other, but it looks to me like kind of range bound and consolidating around 32. Definitely this chart really, in addition to some of the others, speak to this bearish narrative Joel's taken on here.
Yeah, understood. And when you have that narrative, just tough to break out. Understood the bearishness there. Any final thoughts on Intel, Joel?
Agree with Ben there. Definitely his chart tells a very crystal clear story. Definitely bearish here. Selling that 40 strike call expiring October 27th. Simultaneously buying the 40-50 call that expires October 27th. Collecting about 6 cents of a credit. Break even is 40.06. Then, just like Ben mentioned, that 40.07 didn't have any follow through. So we're gonna kind of sell that top, if you would, with the expectation that we're not gonna break and make a higher high than that 40.07, and we're gonna be able to keep the premium that we collect there.
All right. Next up, you're looking at Roblox, which you're bullish on. I know that they have earnings coming up in early November and November 8th, so watch for that. In the meantime, you have Barbie coming to Roblox as well. They've slowed on talent hiring, so they're being careful with the money. Tell me your thoughts on Roblox stock.
Yes, Roblox, excuse me. I think the 52-week low sits right around about 24.88. That low was tested back in late September here, I think September 25th. And since then, we've been stair-stepping, gradually making higher highs here for the most part. And I think that momentum has the potential to continue. However, I am cautious with that momentum because we can see that chart does not look pretty over a period of time here. I mean, I think that there's some momentum now, but that can soon fade. And so because of that, I do want to kind of stick my toe in the water, being a bull, but very cautiously.
Yeah, understood. What do you think here, Ben, as you take a look at this one?
Well,
potential?
I can understand the caution, and Joel's right about some of the weakness we've seen. High conviction trade to the downside. You can actually see that as we take a look, first and foremost, at these red candles as we broke out below 38, and then you can see as we transition to a bit more horizontal. Joel mentioned the recent lows around 24.88, currently balancing around 27. As long as we remain below 38, still in a very bearish stance here. We're taking a look at 4-hour candles. We're going back to the middle of July, so let's add a little time onto this chart, and you can see a very similar pattern, right? Bouncing around 40, and basically this has been playing out since the beginning of 2022. You can see high conviction on the left third of this screen, and since, again, a lot more sideways and consolidation, overlapping and rotational than we have been seeing in terms of the big move to the downside, but no rejection to this lower level as of yet. And taking a look at where things stand in terms of the 50, the 200-day moving average, pushing back on the bullish narrative on this one, except for this is the one thing that I'm looking at here, Joel. You got the 50-day moving average here. We're breaking above it right now, so he could be right. We could be onto something. Coming off the recent lows around 24.88, but in my opinion, is still in a bit of a trend to the downside.
Right, understood. Final thoughts here. What do you think here, Joel, as we wrap this up?
I'm closing those puts.
Very cautious bull here in Roblox, selling the 2250 put to get long there, simultaneously buying the 20 put. Both expire November 17th. Credit of about 23 cents. Break evens 22.27. So currently trading 30. We would have to.
I want to make sure it's stayed above here
and break that 52-week low in order for those 2250s to actually be tested. So hopefully that does not happen, and I keep the premium that I collect.
So slow on this platform.
Joel Hawthorne, themorningsnapshot.com, Netflix, Intel, Roblox, and our own Ben Lichtenstein on the charts. Thank you both so much, Joel and Ben, today. Coming up next,
all right,
we're going
we've
to
got
a new esports company making debut on the NASDAQ. We're going to talk more about it.
Room to rally.
An update on some of the big tech names you're interested in.
The big
like
channel
Meta
break there.
and Microsoft, what you need to know today. More Trading 360 here on Schwab Network. We'll be right back.
This is all bulls building liquidity. But being today, bank holiday, low volume, dated later this week. Not expecting a huge move. Yeah, Dish. It's not doing so hot. AMC back up to VWAP 1%. Oh, it bounced back up. Okay. Dish up 2% now. Take a little profit at high of the day. Entering back into that puts here was dumb. Should have stopped myself out. Get into your positions as close to your stops as you can. And I didn't consider that when I opened this up. Considering my stop would be way up here. Once it started to rally, that's what I put on. I'm like, oh well, I guess if it breaks this, then I'll stop out. That's a huge range. Should have stopped myself out much sooner. Try to get a better entry. It's gonna fold that, dang it. Yeah. I slid it up and now I click fold, but it automatically does whatever it's at the end of your timer. There's a little non-tilty, tilty all in. I'm to think I'm tilting. I got that guy to call. I got 5, it's not bad. GNS 7 1/4. The lack of like patterns on this move to the upside is not very bullish though. So I don't think there's gonna be much of a move up here. Unfortunately, take a little off right there. We can pack those losses from that stupid put.
Students in the university level, and we've signed up 119 universities and we are competing in tournaments in 2021. Since 2021, one of the big improvements that's happened in the time, because the internet quality was a problem, and we were doing tournaments, and buffering and things like that happened, but the Pakistani government just embraced the sport of esports and did a strategic partnership with Tencent, and they've fixed the quality of internet capabilities in Pakistan. And to prove that, in 2022, Pakistan in world rankings in esports, they were number 54. And with the advent of the change in the internet quality, they rose to 25th in the world rankings in 2023. So we think we have, again, very tech-savvy people, and they're great esports, and they're just excited for the future.
It's amazing when you listen to some of those stats, how many young people there are. When you said that 60% of the folks are actually under 30 years old.
Another one here.
I mean, I can't believe that. And that's the kind of data that you need to grow this company. As Chief Data Officer, Nick,
sounds like nobody's on the trading floor.
Because we see some of these growth projections, and at number 25 in the world for e-gaming, I guess the only way to go here is to continue to grow. It sounds exciting.
Yeah, and also looking at other forms of revenue. So for example, helping things like big brands like Unilever and Procter & Gamble, best be able to identify their customers that are actually over there in Pakistan. Those are the customers of tomorrow, are those esports gamers, those college students. And one of the cool things about esports and whatnot, and the way
so fast I can't even click it,
is there's no bots. And by that I mean what we're focused on is actually things like the movement of the data. So I like to think of it as all of our data moves. So essentially, because we're tied in so heavily to mobile, as well as with gaming, we know the relevancy of that individual and know that it's not a bot.
Kings.
So brands can rest assured that they're able to reach that target customer of tomorrow without wasting money on bots.
It's pretty
Nicole,
amazing because,
I'm sorry, I'd just like to add on that if I could. I was a media and entertainment executive for 30 years, distributing content for Warner Brothers and Viacom. And this is the demo that we could never reach. Content creators could never reach.
GME is rallying up there a bit.
Television. They don't like appointment television. They don't like to be told what time to watch
leading indicator for SPY
programs or sports. And esports was their sanctuary, and it really was their independence, because I was one of those ignorant, fathers 6 years ago, and it's ironic that I'm CEO of a gaming and esports company right now. But I used to, kick my sons outside because we live in Southern California, and I said, "Get outside; it's beautiful out there." And I just didn't understand what esports was. And this really is.
And you're a good father for doing that.
Something great that we're doing in Pakistan, and we're very excited about it.
Yeah, and tell me about and I agree.
These guys are playing so
and
loose.
I had gamers, and I understand the draw and the need.
This guy just punted away.
And the bad, right?
The rest of his 10 million.
Too much of anything is probably not good for anything, but just the right amount's probably just right. Talk about the advertising too, Jim. I mean, there really is a lot of opportunity to grow this company, isn't there?
Hidden full house.
There really is. I mean, this is the advertisers are now getting involved, obviously sponsoring tournaments and advertising, but with the technology, they're actually, brands are being put into games now. So. And that's actually what is on our blueprint for the future. We want to develop and own our own games moving forward, and we started the process. We've talked to game developers around the country, and there's very talented people out there that just haven't gotten their games across the goal line because of maybe financial restrictions or whatnot. But so we're in these conversations.
I would say he's just a nerd.
Part of it, and moving forward, we're going to own our own games.
Yeah, which games are the most popular on the platform right now, Nick?
I wouldn't say focus so much on the gaming part right now, actually. One of the other elements, let me actually add on to what Jim was saying, is that it's actually helping these, esports athletes find the
you might have some issues, actually.
And deals. So we're actually looking
Which
to see, say,
would
what that social following,
put you on drugs if you're
community
following
of that, say, esports athlete.
our
What
medicine
brands
system.
are they relevant? What brands do they shop with? And it's actually trying to also enhance the value that these esports athletes are actually able to deliver directly to these brands. And we can help facilitate revenue and new forms of profit for these esports athletes, and help the brands also at the same time is reach that customer of tomorrow. So it's not so much focus on the high impact of, say, the game itself, but more of the audience that the streamers are able to reach at scale.
Yeah, okay. Thank you both for being here. Jim Knopf and Nick Venezia, thank you very much.
It's a certainty, Cassidy.
GPAK today, and so we're very happy that you're with us. Gamer Pakistan, thank you. Congratulations. Coming up next, a look at our disruptor Zscaler. Well, it got an upgrade. We want to tell you all about it. George Sillis has the details and an example trade for us here on Schwab Network. Trading 360. We'll be right back.
My dad.
I folded. Alright, I'm putting a stop on the rest of those calls. I don't know anyone's been bashing gaming. Most have been pretty bullish on it. Especially since COVID. Came right now. Maybe you're thinking more of GameStop particularly, like brick and mortar. And selling physical discs to play game they can get digitally without leaving their couch. That's not bashing gaming though. Hey, see how the market's just kind of melting around? Yeah. Ugly. Oh, that other guy left. Dude, that just stopped me out. That little move. Diamonds. What's up? That little move stopped me. I got those calls at such a bad price. What? You had a queen of diamonds? We suck again.
Hey
think the analysts are starting to look at this a little bit more closely, considering the expertise and, of course, a large market share that Zscaler is gaining. And they do like the billings growth, especially for the customers that are actually spending about $1 million or more per year. That is actually increasing. In the last quarter, that was a record number compared to the company's history.
So at this point now, this is a nice double upgrade here when you go from an underperform to outperform their new target 190. What do you think is a good example trade here today? I mean, the stock already got a jump 3% today. So how would you go about a trade today?
So with this jump today, it's actually a good place to be positioned bullishly. I know it sounds counterintuitive. A lot of times, these stocks move to the upside, and the whole objective is to buy high to sell higher. So if you look at the trading range that the stock was in, it actually broke above that on the high end, which was around $165. So what we can do is place a bullish trade, even though the stock is moving higher today. We're going to play the trend continuation after that breakout. We're going to go out to November with about 39 days to expiration, and we're going to buy the 165 call and simultaneously sell the 175. So this is a long call vertical. Altogether, it would cost you about $5 a share in debit or $500 a contract. So the whole objective is to play the trend continuation after this breakout. Break even by expiration is 170. So it has to hit at least that to come even on this trade. But 175 is your max profit of $5. So you're spending $5 to make $5. And again, we'd like to see the 175 hit between now and expiration to achieve that max profitability.
All right, George Silas, thank you so much.
Yeah, it's just about to get puts. What in the world was that? I was about to say it's a range-bound day. It's some puts. That's insane. What is there news?
And we'll look at those stocks
Gotta be news.
in particular. Which companies may be best positioned in the space? Trading 360. We will
That
be
was
right
wild.
back.
Hold it. Whoops. Yeah, just snapped a VWAP. Back, open up trades at VWAP again. A little bounce. That was weird. Oh, you closed, what, 15 minutes ago? Grab some calls in that channel break. Be pretty tight on my stops. We're choppy. Like this inverse head and shoulders, it might be setting up too. Only problem is we're pretty close to the highs. We need to see a break of the highs or got nothing going for it.
And we think this transition will be supported by the Michigan regulators and also gives investors a nice return on their dollar. And so Michigan's going to support that transition, and DT right now is trading at a group average multiple, so you're getting quality at a fair value.
Right, understood. Brett, you have Brookfield Renewable, BEP. Tell me about that name.
Yeah, so Brookfield Renewable is a little different in that it's a global renewable developer. Why we like it is really for a couple of reasons. One, it's investment grade balance sheet, which we think is particularly important in today's environment. And then the second thing is most of their contracts, roughly 70% of their cash flow is indexed to inflation. And that's not true across the space. When you look at renewable assets and contracts, some are indexed and some are not indexed to inflation. And on that metric alone, we think Brookfield Renewable stands out and part of the reason why we like it.
Yeah, I mean, I have Nexera up, for example, and that's down 1 year, down almost 40%. Brett, why aren't you picking names like Plug Power, First Solar, Exel, Exelon, Nexera? You know, why aren't any of those names your pick today?
Yeah, I think for some of those names, like a Plug Power and some of the more earlier stage alternative energy companies that are not yet profitable, you know, we see opportunity there over the long term, but in some pockets. But for those not yet profitable companies, this capital markets environment is proving especially challenging. And the key task for those companies is to get to profitability as soon as possible, preferably in the next 12 months. For Brookfield Renewable, that's not the case. It generates cash today, and so that's part of the reason we like it as well.
Yeah, I was just looking at Xcel Energy. I mean, that's down 7% for 1 year. Final quick thoughts here, Anthony. I mean, you're just not interested in some of the more popular names that people follow right now?
No, we have some popular names that we do follow that a lot of people like. I mean, obviously the same thing that's happening to the valuation of renewables that's happening to utilities. We're all based on rates. Where we're different is our earnings are intact. We then look for a strong balance sheet with strong regulation. Top two ideas are DTE and CMS.
LNT up 8 1/4.
Michigan with strong earnings growth and balanced regulation. And right now with this attack on rates,
Brad's up 7.
Balance sheet.
Yeah. I'm so glad you're both here today to talk about this group, a sort of a, under-featured group, right? I'm glad we had this conversation today. Anthony and Brett, thank you. Anthony Crowdell of Mizuho Americas and Brett Castelli of Morningstar. Thank you for being with me here on Trading 360. I'm Nicole Petalides. I will see you at 2 p.m. Eastern Time for the watch list.
Oh, that shot.
Market is next.
What the heck? Closing. Closing some there. Rejected that high. Minutes to noon. Got 11 likes on the board. Thank you guys. Got a little inverse head and shoulders here, but we are in the middle of the day chop. This is towards the high of the day, so need this to carry out with a new high. There it goes. Old Poppy. Closing another one there. New high of the day. Close to it. Wow, that rejection. Putting a stop on the wrist.
Points to 43.04. The NASDAQ 100 down 0.7%. 64 points to 14,908. The Dow Jones Industrial Average is pulling up to unchanged on the day, only down 15 points to 33,391. And the Russell 2000 surging back to unchanged, up 60 cents, 1746 and some change. An incredible resilience by U.S. stocks. Now, for more on that, let's bring in my co-host for today's show. He is the Managing Director of Financial Risk Management at Charles Schwab, Mr. Nick Theodorakis. Nick, great to have you on a Monday. This is an interesting day we have going here. Nick, some events are on the calendar and some events aren't on the calendar, and traders, investors have to be ready for both. Nick, your thoughts as we start a Monday with a fairly resilient stock market.
Well, Kev, I plan to be on the calendar in the office with you today here, but unfortunately, car service got the better of me. So can't afford a new car, so might as well go service the old one, I guess. I had to sneak that in. So apologize, I'm remote today. Good to see you. Thanks for having me on. It's a great reminder as a risk manager, and really every trader is a risk manager. I think the term can be overused or over segregated maybe, but everybody that's trading, everybody that's investing is a risk manager, right? And these events, unfortunately, the horrible events over the weekend that have started yet another international war are a real reminder of that. We have to be positioned for the unknown, and there was no way to know, right? Intelligence agencies around the world missed this. There was no way that somebody, trading, would have caught what was driving markets, overnight and this morning. That said, geopolitics tend to, in cases like this, kind of get digested quickly, and then stocks turn back to sort of the focus of the macroeconomic items, as well as earnings that are slated to start later on this week. So
probably about to get
there's a lot
stopped out
of
on
stocks
those.
to consider and think about as we go into this week. I know we'll cover a bunch of what will be the drivers on the week, so you guys are all prepared to kind of pay attention and watch, because there's a ton coming out and a lot of different things. Sometimes it's a housing week. We've got lots of different information coming out this week, and I am pretty interested, Kev, to see with the strength we had Friday, how much stocks have rallied back. We almost got down to 4,300 even in the futures last night on this news, down about 30 points on the open, and to come all the way back, and they've really made two runs now at unchanged on the day. So I think the strength is pretty impressive, given the fact that there's more unknown and more uncertainty in the world certainly than there was on Friday. So it's an interesting week already shaping up, and I think again a lot of drivers that we'll touch on here.
Yeah, we are certainly not a political network. We see everything that comes up on the news as through the prism of trading and how it affects the overall markets. And the risk-off aspect is a true reaction to what we saw. We saw yields, we saw bonds rally, we saw the dollar rally, you saw crude oil rally. You see what it's doing to different stocks. However, there's also data this week. There's also earnings this week. There's a lot of things affecting the markets both today and throughout the week. For more on that secondary story, which is CPI, inflation data, earnings in banks later in the week, let's go to New York and bring in Miss Caroline Woods to the show, who's going to talk about that. We need to keep on the trading aspects that are going to move this market, Caroline. We have big inflation data this week, and then we got banks earnings. What is your take on both those topics?
Hey there, Kev. Yes, the market's certainly focused on geopolitics today, but that's just one of many headwinds that the market is clearly facing. And the higher for longer theme has definitely been a headwind for this market as it tries to digest what the impact of those higher for longer rates will actually mean, especially given Friday's blowout jobs report and also the fact that inflation isn't at target. So we will get some more clues into where inflation is headed this week with both CPI and PPI. PPI is out on Wednesday, CPI is out on Thursday. Of course, CPI is the one that we typically focus on the most because it is the most market moving of the two. We'll also get some Fed speak as well, which could give us, shed some light on what the Fed could be doing at the November 1st meeting. Now, just to break down the expectations for those reports, I was looking, September PPI is expected to tick up 0.3% month over month. It was up 0.7% last month, so a continued moderation there, up 1.6% year over year, in line with the previous number from August. Core PPI is expected to come in at 2.3% increase. Previously, it was at 2.2%, so could see a slight uptick there. Now, for Thursday's CPI number, consumer prices are expected to tick up 0.3% month over month. Previously, that was at 0.6%, so moderation there. Up 3.6% year over year. Slight moderation from the previous month's 3.7% uptick. And then core CPI, which of course excludes those volatile food and energy prices, are expected to tick up 4.1% year over year. Previously, that was at 4.3%. So we'll definitely keep an eye on those numbers. Of course, higher numbers could mean that the Fed would hike again come November 1st, although I was taking a look at the CME Fed Watch
Why retest that high again?
Of respondents right now think that the Fed is going to stay on hold at the next meeting, but we know how fast those expectations can change based on the data, and of course
there you go, SPY breaking out.
They are data dependent.
Too high.
Meanwhile, it's not just economic data though. We'll also have another catalyst for this market.
Gap.
It will really, depending on if they're good or bad, we'll know if it's a positive or negative catalyst for this market. But bank earnings kick off on Friday. We'll hear from JP Morgan, Wells Fargo, Citigroup, and then a little bit smaller. We'll hear from PNC Financial.
Trolled.
So Wall Street will be very keen
bullish
to know
flag.
how these banks are
Broke that.
dealing with higher interest
Tested the high.
rates and
Retested with that.
things
Little
like
snap to
demand
view up.
for loans, consumer
But
credit,
all
the
above the
resiliency
breakout
of the
here, so
economy, conditions for business,
stay
expectations
bullish.
now
Built that little inverse head and shoulders. Still on the channel.
As of this month.
See how much
I know JP Morgan's Jamie
continuation
Dimon
we
usually
get.
gives pretty detailed descriptions of the economic conditions, so it'll be interesting to see what he has to say. And then in addition to the banks, we'll also hear from companies like Delta, Walgreens, United Health, Domino's, which should give us some further, shed some further light on the strength of the consumer, which of course there's a lot of question marks around the consumer right now as well. So certainly a lot that could move this market. It's just going to come later in the week.
Caroline, 23 days until the Fed announcement. We're going to get all of that behind us. And, I agree that the probability dropped a little bit, on the international news. What do you think? I mean, the Fed usually tells us, right, they don't watch earnings. They're not too concerned about that. But these banks, I think, are at a pretty interesting inflection point. What do you think the Fed is really looking for that would tick that probability up? Because I think right now the base case is, we're probably not raising again, but it seems like there's still a case in their mind. What do we need to hear from the banks to ensure that the Fed doesn't raise, or what do you think would swing the Fed the other way?
I wish I knew exactly. I think continued strength, signs of strength in the consumer will only help make the case for further rate hikes. But this is a Fed that says that they are data dependent. They don't necessarily talk about that they're looking at the earnings calls or the balance sheets too closely, but you have to think that they would factor those things in. But I think that it's really going to come down to what the inflation data shows, and if inflation isn't at target, isn't near target, the Fed says, Powell himself has said that they'll continue to hike until inflation comes down. So I think we have to kind of trust him at his word. Obviously, there's some credibility issues. This is the same Fed chair that said inflation was transitory and so on. So I know that some people don't necessarily do that. But, everything I've heard from Powell has been pretty hawkish in terms of attempting to keep inflation at bay. And I think that some of these geopolitical issues, which are sending oil prices higher, I saw they're up, 4% today. Not that the Fed can control oil prices, but it's inflationary, right? And I can't think that that's going to help in the case of a Fed that's going to pivot anytime soon.
Yeah, Caroline, I think it's interesting with everything that we've seen with crude oil and inflation in general over the last month. These consensus readings for CPI down 1/10 in headline, down 2/10 in core. That would be a nice victory. And Lori Logan has already come out with comments this morning talking about the steepness of the yield curve and the move in rates, and that may be doing some of the work for the Fed. So fascinating breakdown of how this is all coming out, and we'll get Fed minutes this week as well. We have so much to consume and digest this week. Caroline Woods, we appreciate you coming on as always and spending some time with us. Have a great day, Caroline. All right, Nick. Now, Lori Logan came out and said, her conviction about the need to hike.
Yeah, that was on fast mode. I knew it.
As a result, because she thinks the higher yields that we've seen, and the yield curve steepening is doing some of the Fed's work. It's my opinion, just my opinion, the Fed wants to be done raising rates, but wants to leave them there and let that ball rolling downhill continue to work. Nick, I'm interested in your thoughts, though.
Well, yield curve, we talk about the rate, right? The rate the Fed controls, and we talk that much about, the overall yield curve shape. And I think it's absolutely right that, the re-steepening of the curve, and you could certainly argue it's not for great reasons, but, the yield curve is fighting to get back to, being uninverted and in a normal shape. And I think there's a lot there. The Fed doesn't want to mess that up, right? They want normal interest rates. The longer dated rates, historically speaking, should be higher than shorter dated rates. So I think some of that work is being done for them by the market, which is good. They also have a lot that they can still control with the balance sheet, right? They don't have to just raise rates. It's not the only tool. It's the one we talk about the most because it's the most obvious in the press conferences and all that. But there is a lot they can do behind the scenes in terms of these markets. And I think, again, not to go back to politics, but we're fighting now. There's essentially two wars being fought globally that impact energy. And I agree with Caroline, right? It is inflationary. So how that factors in, right? They're not going to say, well, the fact that oil's up a little bit today on this news is necessarily changing their mind. But energy and not only transportation, based, but input, crude oil into so many consumer goods, it's a really difficult thing to fight back on. So you've got this sort of push and pull, but we have not seen all of the rate hikes and decisions they've made to filter their way through yet. I just think it puts them in a spot where, inflation is not back to where they want it to be. They can point to factors, like higher energy that aren't in their control. And I think pretty confidently state that just raising rates another quarter or half a point between now and say the end of the year, early next year, isn't really going to have a material impact on those input factors. And that's really important, right? It will have a material input on banks. It will have potential increase in instability in the financial sector if they continue to raise rates. Loan loss defaults go up and mortgages go up. So they have to sort of find that inflection point where they understand they can't control everything with rates and that inflation is still on the right track. And I think all of that is a long-winded way of saying it's shaping up for a longer pause than not. And historically speaking, Kev, if they pause, it's pretty rare long-term history that they go back to raising, right? So I wouldn't be surprised to see a couple of pauses here and then ultimately getting into a spot where if these earnings projections are weak and those come to fruition, that they get into cutting by something like mid next year because the economy really is slowing down. So I'm starting to feel like that's more of the path that we're on here.
Nick, I'm going to make a statement. You tell me where I'm wrong here. As a trader looking at the markets on a daily basis, I see this playing out right by the book. Uncertainty, geopolitical uncertainty, commodities are stronger, stocks are down, defense and energy stocks are higher. Anything having to do with travel is lower, Nick. Besides that, the market's been pretty resilient. Your thoughts?
Yeah, look at the move in United Airlines this morning, down 5%. They were when I last looked. So, I mean, what's the real impact here? Well, it's sort of a double whammy for sectors that get hurt. And similarly on the positive side, Kev, you got the defense stocks doing really well on things like this. So you're right, it is playing out by the books, for an event like this. And there's a lot of high frequency trading that's pretty well tuned into how these things are supposed to go when they start to happen, unfortunately. So you see those initial reactions. I think the question as a trader and an investor is then, are these moves going to last, right? Is it right that United Airlines down that much prior to earnings coming out later in the week, things like that. So you've got, is there going to be a real material impact? I don't know. It's hard to say. But sentiment, and that's kind of, I go back to the earnings, guidance and the earnings concerns potentially going into this earnings season. I don't think the numbers have to necessarily be terrible for the market to interpret these as negative.
Oh,
right?
my.
You're going to probably see some beats and comps are getting better. We've been hearing that now for the last couple of months.
Not much of a retrace for a rally, but
if the consumer really is
there's
pulling
some.
back, we as consumers drive so much of the economy. If businesses, broadly in many sectors are worried about that, I think you have to see that cautious tone, and that could take a toll.
Yeah,
but I think directionally you're right.
We have a very resilient market here so far, but what concerns me, Nick, 150 international hostages and 9 dead Americans. On that thought, we're going to take our first break of the day, come back with our first trade of the day, and that is Coca-Cola. Coke and Pepsi going through some crazy news stories right now. They've got earnings coming up, and we're going to trade both of them today on Fast Market. Take a quick break, come back with more Fast Market in 2 minutes. See you then, everybody.
I averaged into my calls. Not much of a pullback there, but see, I think the volume's pretty light this morning, or today without the banks. There you go, new high on SPY. Do the straight again. See, pretty much flat. GME is almost green though. Climbed up. Brad's up 12.8. Any news on Radical? Nope. This guy's raising when there's 4 spades out there and he has 3 of a kind. What the heck? Go SPY. Your wings and fly away. Jimmy's green. I believe I can soar. See you running through that open door. Believe I can fly. Woo! I just got turned on there. Like a light switch. Maybe that's the same algo from Friday. This one. I want this one to wake back up. Diamonds. All right, let's see. Gap has been filled. We now have Friday's high as the next resistance. Jeez. See if I have another opportunity to average in some more. Hmm. SPY coming down some more here. Maybe that was the top. Pair. See. It breaks this channel. I did. Dang, alright. Well, the top is starting to roll over a bit. If I cannot get stopped out here, that'd be lovely. Dang. You were pretty big rejection off that level. Possibly back into the chop. Take any profits here? I don't think I did. Dang. I flipped my stop. I was able to raise my stop loss, but yeah. Queen. We have a higher straight coming up. Or no straight. Start scaling out of these calls. So annoying, I have to change my stop loss. Folded pocket nines. Building another one. Head and shoulders up there if this level holds. I'm out of the rest. Getting some puts. So slow. Be careful, it is middle of the day. Let's see here. So unless someone has pocket queens, I guess I could have quads. Nothing. Trying to bluff. Yeah, I think this might be the trade of the day right here. After 5 trades already today. Just saying this setup. Might be the best one. This one's pretty good. Call right here at the break of this channel. The puts up here at the break of this channel. Potentially more downside. And it's more clean of a head and shoulders. Middle of the day, so that kind of sucks, but
Nick, back to us. Now we've got the Likefolio data that basically, refutes what not only the price action in PepsiCo is saying, but what the general Walmart and what the news is saying. So we'll see who's right tomorrow morning when they come out with earnings. But for a trade, I did something different. Now, full disclosure. I was the specialist in PepsiCo options. I've traded it for 20 years. So I've been through a couple earnings plays in my life in terms of PepsiCo, and my history is, not always, my history is that this stock isn't really volatile on an earnings play. A lot of news comes out. They're pretty solid, not very big moves. Now, this could be different this time because the stock has moved dramatically to the downside here. So what
a good weekend, man.
I combined the two.
Happy Money Monday to you.
I combined a short Vegas strategy, a sell a straddle strategy, right? In PepsiCo, I moved that strike up higher. So what I did, with PepsiCo trading 159, I sold the 165 straddle, Nick, right? Selling
He's just showing the last traded price, probably.
Then made it $10 verticals.
Yeah, you're just going to have to wait until...
I bought the 175 call, and I bought the 155 put.
Guess there could be a flush out there.
165 straddle. Now, if you notice, 165 is about $5 or $6 higher than where Pepsi's trading right now, right in line, Nick, with the expected move. So if there is a recovery in line with that expected move, you are selling something for $6, a $10 iron butterfly for $6 that could go to a very small number if it moves towards that 165 strike, Nick. So this is an iron butterfly with a little bit of attitude, with about a 19 delta. Nick, your thoughts?
Yeah, if you go, you could look at this a lot of ways, Kevin. I like how you're, always giving me a hard time for bringing butterflies, and then you bring your iron butterfly here to talk about with me. So I appreciate it. You look at a simple moving average as I think I have a 20-day moving average on here. It's like 165 in the stock. So technically as well, just to touch on the stock action, we're below the 52-week low from set back in January. But if we do get a bounce back, you're also targeting that sort of moving average as well. So it doesn't seem out of the realm. So it's kind of interesting. We have two plays here, one on Coke sort of playing the trend and continuing lower, and then you have a Pepsi kind of a reversal here. Andy's data certainly corroborates what you're saying. I think what's interesting, and the reason I really enjoy talking about these defined risk spreads, 3 or 4 leg, you can structure these any way you want. You have an even spread on both sides, right? You have your same max loss to the upside and the downside, but you've chosen your center strike. You could just as easily shift this to the downside if you felt the trend was going to continue. Center that around the expected move there. You can also skew these, right, so that you don't have risk if you get that blow up. But you've gone even here, and the trade-off there, right? The trade-off is that you haven't had to narrow one of those spreads, so you're taking in a bit of a bigger credit. So break even is basically where we are right now, I think, which is interesting on the downside, right? So you're basically a 159 break even based on a $6 price, and then all the way up to 171. So you've got a decent range here. I always say this when you see a risk graph that looks like this, the probability of getting that pinnacle of profit is extremely low. Even if you do pin, there's transaction costs. You have to get out of that trade. You're only going to take off part of it. So you're not going to nail that exact number, but you have a nice ability to get close to that if the stock does recover on earnings. And again, it's tomorrow. It's a very short-term play. So it's got a range. You can see a bit if you get any kind of movement up, you don't have to take action first thing tomorrow. You have until Friday to manage that as well. So it's a good look at an even iron condor, but with the same two center strikes. The short strike, you're really focusing in on where you think that stock is going to go, and it's a very flexible trade that you can really create that sort of shape of risk profile you want around where you think that stock is going to head.
Collecting right around $6. The risk is the difference between the $10 strike and the $6, which is $4. And you're right, Nick. You made a great point there. You're never going to make $6 on this trade, right? You're always going to cover these with some premium before expiration. Your hope, if you make $4 on this trade, it's a great trade and a great winner. So don't expect to make the entire $6 because on expiration day at 3 o'clock, you're betting it's going to be at 165. That is a fool's errand and something you should always just manage. You're looking for a move up towards 165 and a chance to make a good, solid winner. Remember, the risk on this trade is the difference between the strikes and the premium collected. You can adjust the width of the strikes to lower that or make them wider to increase the spread. increase the risk, that's all on you. But remember, the learning aspect of this segment is the strategy, not the direction, not the trade, not even the stock. It's the strategy. All right, let's take our final break of the show. Come back with a market update from Ben Lichtenstein and Mr. George Tillis. We're going to take a switch here and go to Lockheed Martin as the final trade. A little bit of defense stock coming up on the next segment. Take a quick break. Come back with more Fast Market. See you then, everybody.
My dad was a hard worker.
That was mine. Go, spike coming off of that shoulder, off that neckline. We never should get the straight or the flush. Like coming down here, take a little profit at VWAP. Yeah, slow on the trigger. Bounce there. We are midday though.
Segment of our economy in aerospace, missile control systems. You have to think about tactical defense, communications, and even space. Lockheed Martin's got their tentacles in multiple areas of the aeronautics and defense industry space. And I think if you look at the stock, as it's been falling, it's obviously becoming cheaper in price, but also perhaps cheaper in earnings, considering they're earning about $27 a share.
Another little head and shoulders maybe forming here. If we do break here, it's just
year 24.
pretty bullish.
A nice dividend, about 43% of that in dividends, about $12.60, yielding 3%. So I think, again, the defense areas, not defense in terms of military defense, but defensive sectors of the stock market may have been really oversold, including, of course, aerospace and defense. And perhaps now there's rotation back in it. But nonetheless, we know that there's demand for the shares because of what's going on in the Middle East.
Yeah, George, and only a 15 PE even on that bounce today, so pretty interesting. 458 is what I get in terms of stock price for a 200-day moving average, and we're about halfway back today on that move. From being below 400 last week. Is this
Closing
a one-day
somewhere.
headline kind of move here, or do you see is this a potential trend reversal given more uncertainty in the global kind of political makeup right now?
So I thought about this, Nick. I thought, is this a one-day move? It could be, again, in terms of the magnitude of the move today. I don't think we're going to see
so quick on such a choppy day. It's crazy.
7-8% like we saw today going forward. But I think at the end of the day, if the fiscal budget concerns about spending money were tied to some of the discretionary components of defense, but there's always going to be the non-discretionary components. I think that in of itself may play out favorable for this group. I think at the end of the day, when you start to see these flare-ups and of course,
didn't even make it to
attacks in the
VWAP.
Middle East, Washington's gonna do what they can to spend money, and I think that's a catalyst for this group and this particular name. So I think it'll trade higher possibly to that 200 period moving average, but you have to consider that as an area of resistance. It hasn't broke above that, so we have to concede right now that still the bears are still in control despite today's move. But again, if it breaks above that 200-day and retests it from the top side, that might bode well from a major trend reversal. But I suggest really, if you consider the defensive areas of the stock market, a lot of them have been extendedly sold off, including the food stocks, by the way, the utilities. And I'm going to put aerospace and defense in that same category.
Yeah, I think, George, we're looking at what I think, Nick and George, will determine what these stocks do is, remember, everyone thought when the Ukraine war started that it would be a weekend war and it'd be over. And here we are. The same goes for here. Escalation and the duration of this war are really going to tell a story. George Tillis, great coverage of Lockheed Martin as always. George, thanks for coming on. Have a great day, George. All right, Nick, when we look at this name, and it's sitting right at the 50-day moving average. It recovered up to. I've got the 50-day moving average at about 433.56 on the Thinkorswim platform. So what I try to do here is,
200 millimeters.
If you
I haven't even tested it yet.
This is a practice trade. This is not an opinion.
Tested the 200 yet.
This is a practice trade in paper money. If you think that this war could escalate and go on for a while.
Yeah, shake them all out while we hit
2 wars going on at
438
one
and
time.
then 453.
One thing that will be in demand is Lockheed Martin and Northrop Grumman and these defense stocks that we see here. So what I did, by the way, Lockheed Martin has earnings on October 17th. So coming up in the next week or so, Lockheed Martin's going to have earnings. I did the October 27th, so past the earnings event, and then just before the earnings event, October 13th. And I just did the 4
had a nice trade from here to here.
Call calendar, Nick. A 2-week call calendar, which will allow you to roll that October 13th into the earnings event and have the 1-week call calendar on. Both
to get a royal flush here
around that 450 strike, a drift higher in Lockheed Martin. Nick, I got about 1 minute. Give us your thoughts on this 2-week call calendar.
I got back into the puts.
Well, I didn't know that you were bringing this trade when I sent mine. Great minds think alike.
I still like this head and shoulders, this lower shoulder too.
In the Coke one, pretty funny. And
that sucked.
Just how the vol is shaped up, I think this time around, these types of positions seem to be, kind of in favor. And again, just like we talked in the first one, you can position these strikes to where you think the stock is going to go. You get a roll in there with the earnings, potentially to trade that earnings week where the vol would be, at least theoretically higher, and then the vol would come out of that again theoretically after that data comes out. I asked George the question I did, Kev, because we haven't seen this bid come into these stocks as the war in Europe with Russia and Ukraine has dragged on. So it's going to be interesting to see if further escalation globally does help these stocks catch a bid, but this certainly takes advantage of that kind of in the short to medium term.
2-week call calendar focusing on that earnings event that gives you that trade into the earnings event. The risk on the trade, about $4.20 what you spend on the trade. For all of us here at the Schwab Network, thank you so much for joining us on Fast Market today. Thank Nick Theodorakis for hanging out with us for the next hour. Next Gen Investing is coming up with
Next Gen I. See it down 1.6. 2% now. SPY actually coming back to VWAP. They get stopped out on this bounce though. Peculiar. My entry was pretty good. I think I added to it on its way down. Shoot. Wanted to slow play it. Got a flush there now. Ended up getting a full house, oh my goodness. VWAP test bounce. Midday chop. Conveniently timed with the VWAP chop.
Ben, we got red on the screen, but it looked a lot more red just a few hours ago. Certainly on the open of futures yesterday evening.
Yeah, we had a big move on Friday, if you remember, in reaction to the jobs report. Initially lower when that number came out, significantly higher than expected, the non-farm payrolls data. But with that wages component not necessarily supportive of a move lower, again, it came in a bit below expectations without the uptick they were looking for, and that sent the market higher Friday. Now developments over the weekend have, I think, traders, investors a little bit on their heels, but the market's very comfortable around this 4,300 level in the S&Ps, and looking at the NASDAQ just below 15K. This is an area where we've spent some time, to say the least.
How important is it to see this Russell not looking too ugly for once? It seems as if this has been the index that has not been able to get its feet under it. Holding on okay today, kind of an unchanged move. We know the bond market has been almost in the driver's seat for much of the last few weeks. A little bit of reprieve there in light of what you've mentioned going on over weekend on the geopolitical front. A little bit of a flight to safety, but set aside the macro for the next hour. A lot of stock-specific stories to get through. As always, we kick off every show with upvo downvo, so we'll be doing that in just a moment. Looking forward to FOMOs. We're going to go to big tech world. We're going to talk a little bit about Microsoft, some combos there.
And for now, I need to chill.
Actually launching its own AI chip. Going to be a big story if that is the case down the line. We'll talk some on shoes later on in the show as well with Jeff Pierce, and then we'll close things out with a combo on Dish for under 30. So tons and tons to get through, Ben, as there always is on this show. It's a fast-moving show with tons of stock stories. Let's get it started here. Upvote, downvote. They're not endorsements. They're not recommendations. We're just simply going to go through some of these stories. We'll narrow them down for a couple names. We'll explore more with the chart master in the next segment. All right, let's start here with ARM. So this has been a big story that's been sort of under the surface the last month and a half. Of course, one of the most anticipated initial public offerings that we've had in years. Initially, a nice pop around that, but it has not been able to really follow through to the same extent of that initial euphoria. Hasn't necessarily been bad, though, Ben. What do you make of this one, as we had just a slew of analysts weigh in today?
Yeah, Goldman, JP Morgan, Wolf, Bank of America, I think it was. You can see shares are currently trading down by about 0.25% with the broader market. Goldman initiating coverage of ARM with a buy rating at $62 price target, representing a 15% potential upside. Analysts expects ARM primarily through higher royalty rates, not only to expand on its presence in the smartphone market, but they also, with the extent that they have their reach into, cross applications, to which Goldman says they are under index today. So basically you're talking data centers, right? The firm models 3-year annual revenue of non-GAAP earnings growth of 16% and 36% through fiscal year 2026 respectively. And, I looked at the chart here, Alex, and, again, relatively new, right, with the IPO, but this is a stock that's come under pressure. Some volatility after the IPO. Things haven't really, they
I don't know how there's a value if it's not
in terms of some of the selling that we
being traded.
Seen, but
there shouldn't be any value on it right now.
Activity has been relatively contained. Today's move that we saw has them.
It's not a publicly traded.
Kind of near the range that we've been in.
Equity, security.
Basically since the first week in September.
No one can buy it or sell it, so how do you put value on it?
Range bound again since that spike up to 70 we saw on the IPO and back in September after a sharp move higher, but
rallying up,
staying that upper level since. There you can see the chart here. This is actually an intraday look, but the stock sold off hard after the IPO and has kind of been sideways since.
Yeah, and that can be healthy, right? It's establishing price activity. We'll see where things go. Like you said, not a lot on the technical front yet, still kind of finding its way as a relatively new company to the publicly traded world. Next one on the list is Zscaler. This company in that cybersecurity world. Ben, thoughts on this one as it got an upgrade as well?
Yeah, Zscaler making headlines today after Barclays upgrade to overweight from equal weight with a price target of 190. Now that's up from their earlier target of 176. They called it a positioning call. They like the growth opportunity and secure access service edge. They said the SASE could be as big as network security in 2026. They see Zscaler well positioned to be a leader in this growth phase. Now, as I looked at shares attempting to go vertical, a break out of range with the news. Basically, we've been in range since May, but now attempting to get something going to the upside. Back to October last year, levels to move up and continuation of the move. We've seen off the lows from this spring around 85. Back above the 50-day moving average now. Hasn't been below the 200-day moving average since June. Here you can see on an intraday basis the run-up that we've seen just over the last, as you can see, up almost 4% here right now.
These are the kind of names that fascinate me, Ben, because you go back to where this stock peaked out. It's not a surprise. When the market did, November, December 2021, of course, last year was almost a tech wreck, if you could put it that way. So many of these names losing so much value. Then you look at the overall markets, and granted, I know the last few weeks have been a little bit of pressure on equity markets, but at one point we had a NASDAQ that seemed as if it was at a stone's throw of a new all-time high. S&P was within 5% or so, it seemed like at one point, or pretty close to that mark. Yet we have names like Zscaler, granted nice day today, that are like half the value or even less than half the value that they were. It really goes to show that whole Magnificent Seven, which we'll of course explore more during FOMO with Microsoft being a key player in that, really dominated this market and put things on their back throughout 2023.
Yeah, recently a move up to 172, and should they continue this momentum that we've been seeing to the upside, then we're talking about the next big hurdle. It'd be the high from last fall, up around 200. So basically breaking out of about a $35 range that we've been in, and that move, if we were to get back to 200, really solidifies the bull pattern. We're trying to form a bit of a bottom off these lows from earlier this spring. So definitely what the longs have been looking for here, Alex, and basically, yeah, I mean, as I mentioned here, this move, a significant move up here, it's taken them out of a range that they've been in. This is could be the start of something big for them.
Next two on our list are, of course, separate companies. Really don't have a ton in common, except this week they got a lot in common. They both got earnings this week. Let's start with Domino's. A little bit of analyst movement as well here, Ben, but they're also both somewhat kind of loosely linked to this kind of diet pill craze. Look, I'm not buying into this narrative yet. I want to see the numbers from these companies, but they got my ear because you don't see companies like these make these kind of moves before earnings that often. So they certainly got my attention. I want to see the actual numbers though going forward, but what do you got on Domino's?
Well, I've got basically the idea again that you were talking about, the people are eating less snack foods, right? You've got Bank of America also lowering the price target for firms, got it now to 461 from 43. They keep it as a buy rating ahead of earnings, as you mentioned. Now that's going to be on Thursday, October 12th. When I looked at the stock here, what stood out to me in terms of Domino's, shares topped out in July around 409. They've been lower since with the broader market again. Into today, down 3 of the last 5. 5 weeks and down, well, 3 of the last 5 days, I should say, and down big from the beginning of October around 382 to Friday's low, which was down around 330. They're back below the 50-day moving average, they're below the 200, the longer dated moving average, into the middle of the range that we've been in since January, February of 2022, basically 420 to 285. They double topped around 550, 560 from a couple years ago, and well, lower highs since. Take out the May low, and we're back to levels we haven't seen since March.
And the next one, Pepsi. Okay, if there is this diet pill curbing cravings of snacks type of a story, and there's truth to it, even in the slightest, you'd have to think, the market thinking the same thing, I'd have to imagine, PepsiCo, with its exposure to the snack world through its Frito-Lay division, is going to be as exposed as anyone. This stock has been essentially, if you can say it for a consumer staple, in free fall.
It has been, and you know, Alex, I think it does tie into that snack narrative and some of the concerns investors are raising as of recent, but also Wells Fargo lowering their price target on Pepsi to 170 from 196, keeping an equal rating on shares. The company says that they're in dire need of a narrative shift. Now, when I looked at the stock here, much like Domino's, right? We've seen PepsiCo come under pressure as of recent. Shares topped out in May and have been lower since, last week to 155. The weekly candle chart, it's not a pretty one. Since the highs we saw last spring, that was up around 197, we've closed on a weekly candle chart only higher by 7 times, 7 weekly closes higher. Since then, down 14 of 21 weeks. So that really speaks to some of the selling we've seen.
That is all the while the market has been pretty strong during that period. So that goes to show the pressure that Pepsi has been under. You can see that behind us, basically going full circle here. Started a year ago in basically the same area. Usually not a good sign either for a name. But we're going to explore those two names, Domino's and Pepsi, a little bit further as our upvoted names. Both pre-earnings looks as they set to kick off the earnings season later on this week. It's not just banks. We'll be right back.
Okay, 10 after 1, SPY kind of chopping around here, that little double bottom, close to VWAP. I mean, it is in this big bullish channel, so it's kind of right in the middle, where VWAP is. Not sure if we get another trade set up today. Looking for a bounce on the bottom of it, or maybe a rally to the top for the short. I don't know. Don't like the midday chop though. In 6s. GME back to green. AMC down 0.8. Got a higher flush. Only one spade. Oh. Dang. Dang, dude.
Steepness associated with the sell-off.
Yeah, and the main thing I want to call attention to with RSI here is that we crossed into the oversold area on Friday. So that happened, and we managed to recover a little bit today, but we also are stopping at this old support level, which is now a resistance level near 350. So we did move out of the oversold area, but you really got to wait for the close when you're trying to trade off indicators like this here, because if we start to weaken a little bit, we could easily sink back below that oversold level of 30 here on the RSI, which would negate the bullish crossover above that level here. So just something to keep in mind here. Don't jump the gun. Don't start making trading decisions before the final trades of the day are in here for the closing prices. So just a general comment there would be the main thing that stands out to me about RSI in this case.
You know, as I look at this chart, I see a couple examples here of where we've seen gaps, big moves, large intraday candles. And is RSI on the extremes, or can it be a reflection of that extreme type price activity?
It can be, yeah. And RSI is kind of nuanced, you know. If you had an oversold reading where the stock was range bound and it was near those lows, you might be more expectant of a bounce to the upside here. If we're trending strongly and we're going into the oversold area, that might not be the same thing. You know, granted, it's up to you as a trader to decide which way you want to play something like this. If you want to go for the mean reversion, if you want to go for the trend continuation here, I can't make that decision for you, unfortunately, here. But, you know, right now we're seeing
just melting up.
Much more shifted toward the bearish side. Even though it's not oversold, we are still below that 50 threshold and moving lower still.
Yeah, momentum price and in the RSI in this instance.
Yeah, definitely, Ben. So taking a look at support and resistance next, we can see here, I zoomed in a little bit on our chart. I added our volume profile study here. We can see that this level right here, this green dashed line near about, what was it, 333 or so, that
right
is
where we stopped.
Yeah, exactly. That's about where we stopped. That's also the -1 standard deviation channel. It's also the volume profile point of control, right around that same area here. So we've got a confluence. We've got a support confluence that could be potentially important here. And our standard deviation channel study, we take our linear regression line, our line of best fit based on closing prices. We do standard deviations to the upside and the downside from that point. So that's why we have this line here that's -1 standard deviation. And that's the obvious point to watch to the downside in the short term here. 314 further to the downside. If that doesn't work out, that's about where we had some lows after our gap up. To the upside, 350. This red dashed line here, that's about where we stopped today. That's about our highs that we reached before we had that gap up. Beyond that, we've got our purple 252-day EMA to attempt to recapture near 360.
I like this third chart. I think it's a reflection and kind of a combination of the other two, right? The RSI, the momentum we're seeing to the downside, and when it gets out of whack like that, oftentimes you do look to those standard deviations to look for an area of support or an area where the market might pause and kind of regain composure. Let's bring Alex in to trade this name and take a look at, well, how do you approach a stock that's seeing momentum like this to the downside, and then again, to some key areas that Rick just pointed out.
Earnings on the calendar this week, Ben, and one thing that options trading strategies afford an investor or trader to do is introduce neutral as a potential strategy, and that's what we've done here. A couple of the levels that Rick had mentioned really stuck out to me. One to the downside around 333, and also this 350 level really sticks out to me as a key level to watch to the upside. And that's the one that we centered here as a key strike in selecting this iron butterfly. What is an iron butterfly? Well, it's selling a straddle. So we start with selling that 350 straddle, and then we look to buy wings. Well, the market maker moves suggest upwards of $22 to $25 move throughout the rest of this week, particularly around that event. This is an expensive stock in terms of stock price. We had to make the wings quite large to get anywhere near that market maker move. And so I made it $25 wide wings here on this particular iron butterfly. That allowed for the trader or investor to potentially get up to $17 as a credit. That $17 credit allows for a $34 window between break evens. 333, that's where that comes in, that level of support that Rick had highlighted on the chart, and then upwards of 367 to the upside. That's
GNS is up
that 360 resistance that Rick
holding some of the gains.
$17 credit is also quite interesting.
GME is now green.
Pin near this 350 mark. Well, this can make to as much as $1,700 on this trade. Not the likeliest of outcomes, but an outcome that is possible on $800 in risk. That risk is, of course, realized beyond our long strike. So below 325, above 375, you're simply taking that $25 wide spread, net of the $17 credit, you're left with $8 or $800 in risk. So a classic premium selling strategy that is neutral in construction here, Ben, and a stock that's been pretty beat up, a little bit volatile going into this earnings event.
Alex, Domino's Pizza, wings. If we hadn't had lunch before the show, you'd probably be able to hear my stomach grumbling right about now. Let's check in with Rick Ducat on shares of PEP, because much like Domino's, we've seen some weakness here as well, Rick.
Definitely. We're down about 19% from those yearly highs, near 197 or so right here. And it's been a notable move to the downside for this consumer staples name. You don't really see these big swings in these stocks, but we had a notable drop off on Thursday. But backtracking a little bit, you can see much of the recent price action has been a downward channel type shape. These two blue lines encompassed a lot of the price action, and that's what we're trying to do with these trend lines and these patterns here. We try to just describe what's happening with the price action. And what's happened recently is the downtrend has accelerated. You can see we've got a steeper trend line right there going across those highs, and then we had this big drop off once we crossed below the 167 level. Now if we look back over here a little bit, you can see this 167 level was the where we had the lows after this earnings gap. It's about where we bottomed out here as well too. So this is an area where we saw some potential support here, but we just blazed right through it, just not even putting up a fight really on that big downward candle on Thursday.
Yeah, as I look at this pause right here around 167, 168, into the 166 area, again, that coincides with the lows from earlier in the year, but once you take those out, you can see the high conviction of the downside all the way down to 155.83. Rick, let's take a look at your next chart, because I want to see what the RSI is telling us. With this strong acceleration of the downside, that's about what you'd expect to see, right? A big move lower in price coincides oftentimes with that relative strength indicators we talked about on shares of Domino's.
It's no secret here, based on our last chart, the trend is down right now. We've got our trend lines going down, moving averages sloping down, price below the moving averages here. RSI, if you're hoping for any bright spots here, unfortunately, I can't really give you some. Maybe if you really wanted to look for it, you could say a little tiny bit of bullish divergence here in that RSI is not making a new low while price is making a lower close here. I really would not be too keen on that. I don't think that that's very reliable in this case here, because we're in a strong downtrend. RSI is fairly oversold here. We're below 20, and RSI only goes from 0 to 100. The lowest possibly it can get is 0. 30 is oversold. We're significantly below that level. So it suggests some intensity to the downside here. So a little tiny bit of bullish divergence that you have to squint to see while it's still oversold. I would really caution you against that idea.
Especially with the acceleration we've seen in terms of price, right? This is a freight train that's been moving south right now, and no indication that we've stopped as of yet or pulled into the station, so to say. Rick, talk to me, when you get a big move like this lower in terms of price, RSI supportive of it, much like we were just talking about in terms of Domino's, I'd imagine with PEP we've got to kind of revert back to these standard deviations.
Yeah, I chose to include the standard deviation channels once again here, just my own kind of anecdotal observations, stocks usually tend to stay within -2 and +2 standard deviations here. You can see that we saw a bit of a chop right around this this -2 channel here. That's the orange line here. But then once we gave up the ghost here and once we fell below that support level, we didn't even pause at that -3 channel. We were much closer to winding up near the -4 channel here. So really quite an extreme move based on its own history. That's really what these standard deviation channels show us, how extreme the move is relative to its own price action in the past year here. So we can see that this move is significant. It's something that's heavy to the downside here. This also gives us a support point to watch near 155, resistance at our -3 channel that I circled earlier near 162, this red line there. And you know, really it's pretty tough price action right now. I mean, if we keep going lower, that'd be a whole nother conversation.
Proof positive of a stock that could continue lower even while it's in oversold territory. So lots to watch here in these two names. Rick DeCat, thanks for joining us here, the chart master, to help us take a look at the technicals. I want to bring Alex back.
You're trying to get calls on break. I'm so slow. I'm going to set up hotkeys over the weekend.
The points Rick made are well taken.
Thinkorswim.
And if we didn't have an earnings event on the calendar this week, I may not throw
Need to be prepared for that.
the wind, but with this particular trade illustration, it harkens back to Nike just a few weeks ago, Ben. All the sentiment was negative. All we heard leading into that was that earnings were going to be bad.
130.
And they weren't that good, but they were better than the rumor. This is potentially setting up for a massive selling of the rumor and potentially quick cover into the news. And so what I looked at here, sometimes you're just plugging your nose. You don't really have a good feeling other than it just seems the other side is crowded. In this particular case, that was sort of the sentiment. And so it's still risk defined in the event that this downwards trajectory continues, but looking at selling a put vertical below the market in this week's expiration surrounding this earnings event. 155, 152.5 were the strikes selected for 50 cents. So that's 20 cents, or 20% rather, the width of the strikes. It creates a 4-to-1 risk reward ratio. So you have that sense of a little bit of cushion here, a little bit of probabilities potentially on the side of the trader or investor deploying this type of a strategy. We got $200 in risk to make 50. Break even is 154.50 on a stock that's trading about 159.50 right now. This stock is 30% off its highs from not that long ago, Ben. That is not typically the action you see in a consumer staple. So this is a situation, Ben, as we look at this strategy, where basically it's just a fading of what we've seen. And sometimes you don't have good feelings other than that the other side maybe have overplayed their hand, if you will, and that's sort of the idea here.
Well, very bearish narrative of the last couple months, right, with some of the diet drugs and what we've been hearing, some of the concerns associated with snacks. And I'd agree, maybe a little bit overdone. Maybe the selling has been a little bit too much ahead of the event. Definitely earnings could turn this around.
Volatility elevated a little bit into the event
as well,
particularly with this sell-off. So something to think about as we go into earnings later on this week in Pepsi as well as Domino's. Coming up next, we're going to do FOMO. We're going to be focused on the big name making news today. That, of course, is Microsoft. News of an AI chip in the works. More on that right after this.
Brad's up 18.3. Like this morning's green algo waking up potentially. Still midday. Oh, another one up there. Gonna stop on the rest. I had a bad entry, so I'm fine to stop out of these. So slowly. There it is. Nice. Finally got a break.
Let's get nuts!
Let's get nuts. Tony T, thanks man, appreciate the dono. Well, barbecue, the number last week, your trade account was showing 0 this week, it's showing where it's closed last day, it stopped trading. So yeah, it's just showing last traded price, right? But yeah, it's no more. So basically, your shares, from my understanding, are just holding a shell company that is now owned by Butterfly, I believe, and the only asset or value it has is the NOLs from Barbecue's bankruptcy. So you can't really put a current value on it since it's not traded. No one can buy or sell it, so you're basically just waiting to see if you're gonna get equity in a new company. Alright, I'm selling one up here, Taco Channel. So if you are getting equity in a new company, it most likely will be much more valuable than the 7 cents a share it last traded at, which is good news for that. Likelihood of you getting it, I don't know. It's a gamble for sure. Look at SPY go. Yeah, this is Friday's algo right here. Glad I took the smallest position on that break. It just happened so fast. Like just put in that line, and then it basically immediately just broke it. Closing another one, and then I'll have a stop on the last one. Look to reload maybe. Lower down in this channel, preferably.
Name has been talked about. It's been around for a long time, but potentially $10 billion valuation later on this week as it debuts on the NASDAQ, or is expected to on Wednesday.
How about Birkenstock?
BIRK, Burke is the symbol, so we'll be looking for that. Appreciate it, Kevin Green.
Uh-oh.
Get that traditional, I don't know what to call it, slip-on shoe.
It's not my style by any means either, Alex, but I'd imagine with the Crocs, the success we've seen in terms of that shoe line and the demand for that product, that we could expect to see further advances there if things go well, right? If the trends continue, I guess. But it did sound like Kevin was talking about some of the concerns he has with some of those consumer trends.
Totally with you. I do wonder the timing of it all, because it's not like these tech names, it's not like ARM coming to the market when NVIDIA is crushing it. They're sort of seen as intertwined.
Okay, so that's actually the tapering channel, I think, right?
It's Birkenstock coming
we've
to
got
the
till this
fold
one up
when
here.
Nike's struggling, when Under Armour's on
Should've
its
zoomed
butt
out.
as well. These names, potentially a comeback could be
break of that
a boost
bullish.
for Burke down the line. I'm
Let's see the
excited
top of this
to
one,
see
then.
what it does as the week rolls on. We'll get an idea for that
We're
risk.
not
side of it, but
rolling
let's just do
over.
a harsh transition here because I want to keep things moving. It's time for FOMO. Let's talk Microsoft. The stock has crossed into positive territory now as the overall market has gotten its legs under it. All 4 major indices in green territory now, even the NASDAQ. And bond market holding firm as well. So kind of a nice day here brewing for equity bulls. And oftentimes,
Be patient.
it's
It's
not always
1:30.
the case.
Still plenty of time to
You
make
see
a
green
good
in
couple
NASDAQ,
trades.
S&P, Dow. You got a good chance that you look over and you see Microsoft
If this holds,
in green as well.
though,
Yeah, Microsoft, a major
there could be a setup for
player,
kind of a head and shoulders into end of day.
Heavy NASDAQ. The indices
This
in
resistance
general,
holds.
to Alex's point,
We
I mean,
move
it
back
tends
up into
to,
this higher one.
Be a pretty good indication
Definitely
of what
bullish.
the market's doing here. I did see that, the information reporting, citing a person with direct
Wait for a
knowledge,
break
said
of
that
this, though, before I
Microsoft
get any
plans to
puts.
unveil their first chip designed for artificial intelligence at their annual developers conference. Now, that's going to be in November. It would obviously lessen Microsoft's reliance on the NVIDIA products, the AI chips, and keep in mind, they've seen supply shortages. They've seen spiking demand for those chips. The chip is designed for data centers, essentially, that are trained that train and run these large language models. The software
War is pretty bullish for the
the
market.
AI features that we've been talking so much about, the ChatGPT,
Historically,
the
it has been.
OpenAIs, and I think of Microsoft,
Initial reaction can
kinda
sometimes
similar
scare
to
it,
what we were talking about at
but-
the beginning of the show, Alex, in terms of the NASDAQ hanging out, on the day right now, fractionally higher, just above 15,000, considering some of the headwinds that the investors have been faced with, whether you're talking in the indices or some of these individual tech stocks. I mean, I think that they should consider current levels a win in many ways. You've got rates that have been at extremely elevated levels. We've seen a huge run up that the market, for the most part, I mean, one could argue is sustaining, right? Holding these upper levels. So definitely, again, the narrative could change on a dime if we were to see yields continue to extend to the upside. But at these levels, I think it's a pretty positive narrative still.
Call me chart skeptic at times here, Ben, but even my armchair technicals can look and something changed in the middle of July. I mean, just basic, higher or lower highs, lower lows seems to be intact for this name, even with its recent bounce the last few sessions since peaking out in the middle of July. Has any true technical damage been done yet, or is this just, as you kind of describe it, that vertical then horizontal phases? Or are we just in the most recent of these horizontal phases?
I looked, Alex, at
Ripping
some of
up
the
there,
price
spot
activity
new
we've
high.
seen. And what stood out to me is how shares double bottom back in the fall of last
Not
year.
enough of a pullback
at the
for a
beginning
re-entry for me.
of this year, down around 220. The stock rallied to a July high of just shy of 370, up around 367. It's been mostly sideways since. Earnings this spring, back in April, sent the stock above 300 for the first time in a year, but the move which we saw, the November 2021 high being taken out, kind of fizzled. And again, I think you can tie this up to, well, there you can see a very similar pattern in terms of the run-up and price activity that's been sideways, not only in the bigger picture, but also on the intraday here. And chalk it up to rates. There's a lot of focus on the move up we saw last week. The yields 5% in the 30-year.
We had talked a little bit at the top of the show, name like Zscaler that had traded upwards of 380 a share, was down in the 170s, given back over half of its value. This name, Microsoft that is, not in the same boat in terms of performance. This is a name that had actually set a new all-time high in mid-July. It has given back about 10% of that move. But we are within 2-3%
Adds up almost
of where
20%.
we were, when the market topped out in November, December of 2021. So it's been a really impressive comeback off its lows, as you talked about that double bottom. This stock got down to 200, and it looks like, let's call it 213, 214 bucks
Back in
a
October
share.
of last year.
Yeah, it has come a long ways in a hurry given its size and scale. So really impressive comeback. I looked at a strategy, and granted, the stock was a little bit lower this morning, Ben. So some of these pricing may be off. As just the last half hour, the market has started to spur a little bit of positive movement. But going out to October, we have an earnings event that is slated for the following week after that. We're in sort of that
should help a little more, I guess.
I'd almost call it where you're forced to either consider trading
Wasn't
into
sure if we're gonna
earnings
start
with a little bit
rolling
of time
over.
to it, or avoiding it altogether and
We're at
doing
the
a
top
very
of this
short-term trade.
less bullish
Because
channel.
we could go out still another week beyond this week, I
GME
did elect
up
to stay
almost
ahead
1%
of
now.
the earnings event for this particular
Waking up
trade
with SPY.
strategy and just go out to the October 20th expiration, knowing that it's likely we'll come back to this name around that earnings time. Looked at selling the put vertical to 317.5, 315. And granted, again, the stock has rallied a little bit, so these strike prices may be off slightly from what is in real time, but the idea remains intact. And the idea being selling downside here, selling a put vertical below the market, giving the investor a chance to capitalize on heightened implied volatility market-wide, given some of the geopolitical tensions, but also the recent sell-off in the market itself, leading to some higher option premiums. This strategy would have a break-even of 317. And of course would benefit to the point of max profit above 317.5 after next Friday's expiration. It does take $200 in risk for that $50 in max profit potential. So a 4-to-1 risk reward potential here, Ben, on a neutral to bullish strategy in Microsoft ahead of earnings, with that event being the week after this expires. So not something an investor hanging out in this October 20th cycle would have to worry about. All right, we're going to take a short break. We get back. It's time to discuss On Holdings as the footwear maker got a bit of an upgrade here. Jeff Pierce is going to stop by, give us the latest. We'll be right back.
Oh, they turned their tick down a little bit. There's 1% on GME. Accidental slow play. There you go, SPY. So zooming out a little bit. Kind of made the cup on Friday. Yeah, if you look at extended. Made the cup on Friday, and today we basically made the handle. So now we're retesting the high, which would be my next profit target if
Let's get nuts!
if I had more. But I gotta have one for the homies, so not going to take profits at this point. Yeah, there's a retest on Friday's high right there. Tony T, thanks for the dono, man. Appreciate it. DRS for sure. You trade to DRS for this. You could DRS it. It's not a bad idea. I think with what the play is at this point, because it's not like you can trade it, and you can't sell options on it. So might as well DRS it in case there is a problem with the brokerages, and they're trying to stiff you for some reason. Thankfully, since you're on E-Trade, they probably got, I don't want to say real shares, but probably Probably less sketchy than if you got them like on Moomoo or Weeble, or look at SPY just ripping through there. So cup and handles, dude, that is crazy. Yeah, this is that Friday I'll go back awake. Holy carne asada burrito. I'm more of just a chicken guy, but that sounds good too. Actually, look, that's the top of the yeah, that's the top of the bullish channel too. Just so happens to line up, you know.
Beyond 2026, they said that they hope to achieve net sales growth of 20 to 25% annually, with adjusted EBITDA margin to reach more than 20%. So some pretty impressive numbers for the company, which is up 60% year to date, although off those $37 highs we saw in August.
You know, Jeff, we've been talking about some of these stocks here today, whether it be IPO names or some of the consumer discretionary type products, snack stocks, for example, amidst the diet themes that we've seen. And obviously some of these retail names are going to be in focus. Now, Jenny Horn has the day off because she was running the marathon yesterday, but I was also on the course yesterday, and I got to be honest, I saw a lot of these out there. I mean, you have your normal brands that have been up and coming for years and have been widely used, but this is starting to really make a name for itself in the running community, not only shoes, but the apparel as well.
Yeah, absolutely. And I think that's what we're seeing from a lot of analysts. You know, we saw last week Wedbush reiterated their outperform rating, put a $36 price target, talked about some of that penetration really that they've seen here. They said the brand still has less than 10% awareness in the U.S. In Germany, they only have about 15% awareness. Even in their home country of Switzerland, their awareness is just about 50%. And you're right. I mean, I'm a pretty avid runner myself. You think of the big names, which they're not in competition with right now, Nike and Adidas. But you do think of the names like Hoka, who has really emerged as a running brand. Some of those names out there like Brooks that have been around for quite some time. Hoka is really the name that we see On kind of compete with, I think, because their maturity is about the same. They've been around for about the same amount of time, and they've really exploded over the last few years, not just in running. We've seen On, of course, really play a new role in tennis that we haven't seen before, and the marketing is continuing to grow, and now we're seeing On grow their brick and mortar side of the business as well. They started with about 8 stores when they IPO'd. They expect to have 30 by the end of 2023. There are some analysts that think that could be a big push for this company.
Jeff, I can get behind the fact that maybe some of the footwear is a little expensive, particularly if it's high performance and let's say you're running distance running, some sort of competitive running. But they're selling tank tops that are $70 here. This name must be competing with the names like Lululemon, maybe some of those other athleisure companies, because I got to be honest, if I'm running, I can wear a cotton t-shirt just fine. Maybe I'm crazy. Maybe I'm just not a runner. I don't know. Any final thoughts here before we say goodbye?
Well, I think it's right to bring up Lulu, right? Because Nike really held that space. Lululemon pushed them even further into kind of the athleisure wear group, and they were an expensive group. And I think On thinks of themselves in a very similar way, or at least is acting like they do, because they are continuing with higher prices. They expect that to increase their margins. And as long as the sales can keep up and the consumer can keep on these discretionary items, which is a big if, then certainly the company could benefit from that.
Jeff Pierce, Senior Manager, Derivatives Trading, Charles Schwab & Co. Appreciate the update. All right, coming up, we got under 30 Dish Network. Ben, we're going back in time to take a look at the Dish company. Stick around. George Chillis will be joining us. Go through that.
You got to call E-Trade.
On the move here today.
You can maybe try and chat with him, but you probably just need to call him and tell him you want to. Probably going to be some fee. Probably take a little bit of time, but yeah. Like I said, since it's not tradable, there's makes sense too. Look at SPY. Holy moly. Holy moly, me oh my. Here's the top of that channel. Just straight. I'm gonna sell this last one actually. Okay, I closed the last one. What a mission to try and close it. What I called. What a mission. Alright, so no tapering. Still not gnarly, you know. Yeah, no worries, Tony. Appreciate the donations, bud. He's up 1.5 with that push. Well, that move, even though that was the smallest position because I jumped in so late, made me green on the day, so that is neat. Probably just my best to not overtrade at this point. Tough though, because that move could have been a much more profitable. Oh well.
Friends for Dish, but there is something interesting here from the standpoint of the value of the company, because if you look at what Amazon has been doing, they're partnering up with Dish to start to sell mobile subscription plans through Amazon. So that's a very good catalyst, I suggest, for Dish. But I think the challenge really is the company has been losing subscribers both in its linear TV business, but at the same time, as companies like AT&T and we know T-Mobile, Verizon have actually been growing. It's been unfortunate for Boost, which is owned again by Dish, that they've been losing subscribers. So I can see why it's been in a downtrend. It really is from the standpoint, even from the capacity of profits. They are a profitable business. They just happen to be demonstrating really a significant decline in both in revenue growth as well as earnings growth.
New high there.
That's why the stock is down.
George, you know, as I look at some of the selling, I'm wondering, well, some of this I'd imagine is tied to the enthusiasm associated with cutting the cord, maybe being lost over the last year or so, as many already have, right?
At the top of the channel.
Also, as I look
I'm not going
to
jump and get puts.
Is this a stock? Is this what price activity resembles when you have a company that's kind of trying to not necessarily reinvent itself, but broaden its base a little bit?
Market is bullish
today. Some of its offerings. You mentioned the Boost investment.
Yeah, so I think the company's
But
trying to
with this,
reinvent
why I thought this
itself,
potentially
but
could
it's
be the
trying
trade
to
of the day,
reinvent itself through
because this was head and
partnerships,
shoulders
which I suggest is
in
actually what they
tapering,
need. I think
where
if you
the
consider
highs were becoming
what's
less
going on
high,
with this
higher,
particular
but
business, they actually spun off
the trajectory
EchoStar
of them was
about
less
15
high.
years ago.
So I
And
thought
now,
this
based upon the announcement in August, they're repurchasing the company, which is basically a
the
satellite
reversal,
communications
and we
provider.
break the
Now,
lows and
that deal was
turn
approved by
into
the
a
board of
bearish
directors, so you can see
channel.
multiple divestitures,
But this was all still in this bullish channel,
reaccumulation or
so
repurchase of that
just
particular
woke up and
company.
turned on. I think that's
The
kind of what
company
happened on
has
Friday,
cash
actually.
on the books. They got about $1.8 billion. They
Yeah,
are
I couldn't
losing
get out of it
cash
in
on a
time.
per year basis by about $800 million.
Yep,
And the
exact same
profit
thing
growth is
actually. I
shrinking.
remember
But they do have valuable assets, and I think that's what's
it was
interesting
starting to
about
roll
this
over,
name is
and then that
they're
algo
not
just
losing
flipped
money
on
per se on an
and
adjusted
broke it
basis.
out.
They're still earning money, but they're using
See.
their cash to make acquisitions, and they need partnerships
What's that?
to help sustain the growth in their business. But at the same time, if you look at the tangible book value per share, it's around $34. They have an FCC spectrum, which is worth quite a bit. Their mobile and their TV businesses, satellite business, is also worth a lot. But I think the partnerships really will make a difference for this company. So this is one to watch for sure.
All righty, George, we'll keep our eyes on it. I'm not so sure. Declining earnings, a big player like Alphabet stirring around in this space. A partnership with the NFL probably doesn't help either. We'll see where it goes. Certainly having a nice day here today. George Chillis, Senior Markets Correspondent for the Schwab Network. Ben, before we say goodbye,
AMC up 1%. Overview up now.
Joining us, get some rest today. But what a rally we see in the market. Final thoughts here before we say goodbye.
Absolutely impressive. I think it's tied to, again, some of the strength we've seen, the optimism tied to
Don't do it for me.
We'll see if it holds.
Thanks, Guts.
Just over 2 hours till the closing bell. Appreciate everybody stopping by here on this Monday afternoon. That's going to do it for Ben and myself. Thanks for watching.
No, I think you can make a little trade. It's just risk versus reward, I guess. And where do you stop? Bullish. That's what I was doing earlier. You can make money on it for sure. Trying to trade the downtrends that are really just bulls building liquidity. But the better trades are the ups. But we might not get another good up trade today. It is already 2 o'clock. So final trade might be the move to VWAP. And with that, I kind of want to get some puts as well. I'll look out for any kind of pattern. Maybe pick something up. Say break on that channel. Given it is late enough in the day. We dared the chop. Maybe I'll do it on my E-Trade. Do some 0 days in the last couple hours. That'll get you jacked up. Ooh. High busting out new high there. Full house. We're starting to see here. This holds. Rolling over. Why so far out of the money, Guts? This. Oh, that's the other one. There's 2 o'clock. It's 2 o'clock on a Monday.
Right.
Happy Monday to you.
Its first up week in 5. The Dow Jones Industrial Average was down for the week. Oil pulled back greatly, though today everything seems to have turned around. So here we go.
4 hours to go. Got 14 likes on the board. Thank you guys. Appreciate the thumbs ups.
43.31. The Nasdaq is down 0.4% at 15,037. The Dow is gaining 170 points. That's up a half of 1% at 33,576. And the Russell also in the green. Of course, energy jumping here. Energy is at 85.90, and that is the best performing sector. Industrials, real estate, communication services, utilities are among the other sectors that are doing well here. US dollar 105.83. Gold futures, you can see up 23 bucks at 1868. And Bitcoin pulls back for this moment, down 1.3% at 27,000.
Cheeseburgers.
For a big picture here on the markets, Kevin Green is with me, senior markets correspondent on Schwab Network. Overnight, we obviously saw futures to the downside. We saw energy moving higher, defense stocks moving higher. A lot of what we'd probably expect on the heels of a day where war has been announced. And what are you watching? Could you get into some of the numbers for us?
Yeah, definitely. I mean, right now we're actually seeing a lot of volatility in the crude oil markets, and that's kind of what you're alluding to. Overnight, we did see a huge spike around 3.5% to 4% when it came to crude oil, and we did see the equity markets down for the most part. But we are seeing a little bit of a turnaround here, Nicole, especially when you're looking at the equity markets. They are moving to the upside after Fed Vice Chair Jefferson actually had some pretty positive comments for the most part around
this table I landed on.
The economy and the stance on inflation. So we are seeing yields higher if you're looking at the Fed fund futures or if you're looking at the futures contracts that are trading today. And we are also seeing the equity market actually rallying up over the last, let's say, 40 minutes or so. Now, when we're looking at crude oil, we are seeing also a lot of volatility, especially in the last 5 minutes. Now, there is a report from Reuters that is saying that Hamas is actually open, or says that they're open to discussion over a truce with Israel. That actually dropped crude oil about, let's say, 90 cents since that report. And we're just going to continue to see a lot of this volatility in the energy market. And
next 2 weeks, I mean, we've got a lot of stuff this week, CP line stuff, so you will get an entry there if you have the stomach for it. You'll either be chasing a huge green candle or buying, going long on a huge red candle
but I would suspect
if you want to go long.
Continue to see a lot of news coming out of Israel over the next couple of hours and even days that
this
will
is more movement than I've kind of expected for today.
Continue to see this escalation.
That's why I was scaling out so quickly before the breakout.
Do see a de-escalation type of
just assumed
coming from Hamas,
their data this week.
From Israel, coming from other parties that may be involved, that could also drop prices very dramatically. So we always have to keep an eye on that.
Right, understood. And we're seeing some of the energy names there really jumping, to your point, right? ConocoPhillips was up 5%, Exxon and Chevron were up more than 3%. And I see these defense stocks, Raytheon 4%, General Dynamics up 8.5%.
Dude, folded.
So definitely a lot
Even
of
more Macy's cards.
volatility and movement. The VIX has come off the earlier highs, but still in the green. In the meantime, let's turn your attention over to Meta Platforms. Obviously a clear winner this year, up more than 160%, but price target taken down over at Wells Fargo. Could you tell us about that?
Yeah, definitely. We did see that price target come down. Now it is sitting at $372. That is down from $389 here, but they continue to keep their overweight rating on the shares. What they are really highlighting is the fact that they do believe that their top line revenue driver is still going to see growth on the top end when you're looking at their financial statements. And they are really calling out the fact that CapEx spend could actually increase, or the cycle can expand as they are trying to expand out their AI capabilities, really trying to utilize artificial intelligence into its core business in order to try to obviously spur demand and spur revenue growth here. So overall, they're still bullish on the name, but they are bringing their price target down here a little bit. But that's actually not surprising. We've seen a lot of analysts over the last week and a half really take down their price targets for a lot of these technology stocks like the Big Seven or the Magnificent Seven, if you will, because they have run so far so fast. And maybe this pullback here is justified in the meantime until we get through earnings season.
All right, Kevin Green, thank you for all of that. Really appreciate it. Really good to see you, Kevin Green. Thank you. Now let's take a look at the bigger picture. Joining me right now, Michael Baffis is here, private advisor, Rockefeller Global Family Office. So glad you are here.
Thank you.
Let's just start with the obvious. We just were showing the energy stocks higher, defense stocks higher. I mean, Kevin Green just reported, and I hadn't seen this, so I'll share it with you. He said there was one report from Reuters that there may even be talks of a truce between Hamas and Israel. And so, that caused some gyrations in the market. But I think we're going to see a lot of that, a lot of volatility. What do you expect?
Yeah, I see, obviously anytime there's global turmoil or geopolitical turmoil, the markets try to figure out where are they standing? Where does that mean for certain stocks, certain names? I think in a short-term basis, you're going to see volatility because obviously this is a massive global deal, and the longer it continues, the more difficult it will be for stocks. But at the same time, there will be some value out there in certain sectors. I think, hopefully there is a truce. I mean, that would be the best thing to happen for our world.
Yeah, that's a good way to do it. If you're not doing well with short term, just go longer.
The sense of urgency,
but also
and the
closer to the money.
Dislocation in the markets, and I think
go either way,
continues, the
or
more
both.
Difficult it is to navigate.
So you get to a comfortable spot.
With that, at this point, I mean, we were watching 4350 on the S&P. Then the traders were telling me, after 4350, watch 4200. These are key levels that people watch. And as we got down around that and started to bounce back up, there started to be some optimism in the market. I mean, Friday we had that jobs report, and the interpretation of
there on SPY.
Good news means the Fed's going to raise rates. But then good news was just good news.
Yeah.
What do you tell folks about looking for investment opportunities when you see the S&P back and forth? Are there different sectors that seem to be go-tos?
Yeah, that's a good question. I mean, look, at the end of the day, try to really keep a long-term perspective. It becomes difficult when there is such turmoil in the markets,
should have
but
kept a runner.
We try to stay focused on alternative investments because in these type of markets, alternative investments help. We recommend a 25 to 35% allocation.
Always should have kept. The thing with today, though, and this happens sometimes, is that one contract is what was making me green on the day. Selling off everything else prior. Put me break even, but I wouldn't realize any gains if I didn't sell that last one. That last one I went to break even on it. Did a trailing stop. That's probably what I should have done.
Long-term fixed income is barely 4.5. So
trailing stop up here would have been really nice, actually.
It looks like inflation's slowing. It looks like the consumer has continued to bounce back and is strong. We're really looking forward to the earnings reports coming up. The Q3 earnings reports, and then
that's crazy. It's actually breaking up above this channel.
What goes on in the housing market, and there's a big CPI number.
Freaking bullish.
Yeah, we have PPI and CPI. We'll watch for inflation. I mean, at this point now, I know you do a lot of retirement planning. I mean, you have a lot of high net worth clients. You have famous athletes and people in that type of industry. But retirement planning is retirement planning. I mean, even Charlie Munger today was talking about, the art is not always buying and selling. It's actually just trying to get some some good yield for the long term, right? Even in this inflationary environment, do you think the Fed's going to make some moves? Are you counting on that one way or the other, or how are you planning this for folks for retirement?
That's a good question. I hope it becomes more stabilized. I hope there's not another rate rise.
Yeah.
I mean, I just think the more stability that the Fed can show the consumer, the better it is for the markets. But from a retirement planning standpoint, it's important to have fixed income. It's important to have alts like we discussed. And then, like Mr. Munger said, look for companies that have yield, dividend yield, quality earnings, growing earnings, and sectors, that large cap value is something that I think has sold off recently, is a place that we're adding assets. But again, we try to just keep the perspective long term, especially for those retirement clients.
Tell me about the alternative investing. When you say it, people say, oh, that sounds interesting. Maybe that's something for me. What would that be?
It would be something like a market neutral strategy. It would be something like there's all sorts of hedge funds, macro hedge funds, there's private equity.
Right.
And, we one of the beauties for our clients being at Rockefeller is the access to private deals that we have through a lot of our managers and the partnerships we have. So, it's more a lot of non-correlation to the typical equity and fixed income markets. And I think, you can't put everything in there, but it's obviously something that in a volatile time gives you some stability.
I love that the IPO market has been opening up a little bit. You could tell me your thoughts, but maybe more and more you're seeing as we talk about alternative investing, and you're seeing money because people are not necessarily, it's a little bit of a credit crunch. They're not necessarily able to go to the bank. They're borrowing more privately. You have investors investing more privately. Are you starting to see a lot more flow in that sense?
That's a great point. IPO is a big deal. When IPOs are actually starting to come back, that's a good sign for the markets.
Yeah.
There's still, as difficult as it has been for the consumer and the housing market, there's still so much money on the sidelines.
Right.
That if you start to see deal flow, which you mentioned you're starting to see, I think that's very positive for everybody.
Right.
It's the best when you forget about options.
Are you looking abroad at all? China,
doing really well.
Anything like that? What would you tell people about if they say, oh, I love the Magnificent Seven, or I still love tech or energy? Do you tell them anything specifically about any of those?
Yeah, I think international is there's some value there. It started off pretty nicely this year, and then it took a big hit recently. I still believe non-US assets are something that are very important for an investor's portfolio.
Right.
It's not all of it, but a good 10 to 15%, maybe 20% of non-US, whether it's fixed income or equities, is definitely something that should be part of the allocation.
Right, and next year we'll have an election year.
Yeah.
There's a lot of talk about a Santa Claus rally and some better action, particularly after this third quarter earnings are done.
Yeah.
All right, we'll leave it there.
Thank
Michael Bappas, I'm glad you're here.
On.
Nice to see you. We haven't seen you in a while. Michael Bappas of Rockefeller Global Family Office. Coming up next, we'll get a preview of earnings season. The big banks report on Friday. Our next guest likes Wells Fargo. We'll explain. He's always got some great stock
GME's up 2. AMC's back up. Overview up 2.25. You call me with a pair of 5s. Some puts there.
In Chinese lithium demand, shares are down nearly 30% this year. Alibaba stock down nearly 2% today, despite Citi maintaining its buy rating on shares after revising its second quarter earnings estimates. Citi lowering the estimates due to slower customer management revenue and direct sales growth. Alibaba's down more than 30% from the 52-week high. Shares of Datadog are down nearly 4% after Bank of America downgrading this stock to neutral from buy with the price target of $105. The analyst says that Datadog is still dealing with a tough demand environment, expects customers to flock to lower cost competitors. So Datadog is up more than 20% year to date. Spotify shares moving down. Redburn lowering its price target to $160, downgrading this stock to neutral from buy. Redburn analyst is bearish on this company's new audiobook offering and believes it will hurt global margins. And here's the very latest look at Bitcoin. Right now, it's down 1.25% at $27,795. All right, for more on the markets, we have a special guest here. David Dietz is with us, Managing Principal, PPAC Private Wealth Management. Good to see you, David. Thank you for being here.
Great to be back, Nicole.
And so tell me your big picture. Obviously, we have turmoil. We had pressure in the market. I woke up this morning, early in the morning.
GME's up
futures were
2%.
down 180. Then now, look at this.
AMC's up almost 3.
Green up 200 points. What's going on here, do you say?
This is what makes my job so interesting. We've almost had like a 180-degree turn as to what we're worried about. I mean, remember, last week is higher inflation, higher interest rates, a speakerless House of Representatives creating dysfunction in Washington. Now, of course, we have this tragedy in Israel. My hearts go out to the victims and everyone over there. But, that's changing the game here. Interest rates are starting to come down. The House of Representatives saying we have to get our act together and appoint a representative so we can be responsible and handle the situation if necessary. And also we're seeing some of the out-of-favor groups coming up, utilities, real estate investment trusts, things that have been weighed down by higher interest rates may have a second life here if interest rates can come back down. Of course, we've talked about how hawkish can the Fed be. They may have to back off a little bit of that if, in fact, this conflagration here in Israel gets worse and more people are brought into the fray.
Yeah, understood.
And so, that right there. That's one of the reasons why more would be bullish.
For them to get it together in Congress, which really they're off this week. I mean, they're not even all, convened at this point. I know you had thoughts on oil and recession. Just quickly, a couple of thoughts there.
Sure. So you're seeing that knee-jerk spike in oil prices, but probably I wouldn't get too overly concerned about what this might do to the oil market. Remember, oil is only 7% of the average American's budget. America today is self-sufficient in terms of their energy. So it's much different from the oil embargoes we saw in the 1970s. Indeed, Palestine and Israel are really not big producers there. I think there's a couple offshore platforms off of Israel. The wild card, of course, is somehow if Iran gets involved and somehow takes sides with Hamas, and all of a sudden we need to reinstate embargoes on Iran. That could be a negative for the situation.
And that could happen.
It could happen. You can't rule it out.
Yeah, I mean, that's the uncertainty part, right? And that's the part that makes people nervous when they're putting their money to work. In the meantime, I know that we'll have third quarter earnings coming up. We're going to be looking at a lot of the banks on Friday, for example. And you have Wells Fargo as a name that you like. Tell me why.
Well, you start with the whole banking sector, of course. It's the second cheapest in the S&P 500. It's really lagged badly this year. But a lot of the pain's been in the regional banks. And I really feel that the large mega cap banks have an edge when conditions are difficult for the industry. Now, why Wells Fargo? Well, first of all, there's only going to be 3 of the big 6 that are going to report positive year-over-year earnings. Wells Fargo is going to report on Friday. I think they earned about like 85 cents last year. It could be well over $1.30 this year. So that cosmetically, it's going to look very good. Their valuations are cheap relative to the industry, relative to their history. They're about at tangible book value. They're trading about 8 times earnings. They got a generous 3.7% dividend. And I think there's room for improvement. They're still continuing on their cost-cutting mode. And of course, at some point, it may not be this year, but it might be next year, that asset cap, which has restrained their growth, is going to be lifted. Meanwhile, of course, you've got a company that's focused on the United States, not focused overseas, number 1 or number 2 in all their markets, third largest deposit gatherer. So great institution.
All right. I mean, it had been plagued by a lot of sort of PR issues, too. So getting past that, and you see the potential ahead. How about a name like NextEra Energy? When we look at alternative energy,
utilities have just been a disaster this year. They're down 20%. When
really
the S&P 500 is up 10%. We haven't seen a sector that much out of favor since maybe once since 1941. NextEra is the biggest of all the utilities, so it's really weighing down, because this down close to 40% year to date. It's weighing down those utility ETFs. So why NextEra? It's really a 1-2 punch. First of all, they own Florida Public and Light, Florida Public and Light, which is your Florida utility. It's a great market. They have a very constructive, as we were
coming down a little bit. See what we got here.
Increase prices and so forth. Plus, they have the largest renewable energy.
Still have enough time on the day for it to chop for another hour or so.
So if you're looking for grain,
doesn't have to just revert back to VWAP yet at all. Can make new highs.
Continues to develop. Next year is your name. Of course, down 40%. They should increase dividends 10% annually over the next 5 or 6 years. Increase earnings 9% annually. So it's going to bounce back here. So this is a very strategic time to come into play here. And of course, if interest rates do retreat, people will love utilities a little bit more than they do now, which is not much. And I think that will give a tailwind behind NextEra.
So you just have to have some patience, because as you said, I mean, this group has been an underperforming group, but with some good payouts for dividends and growth, really could fly at some point, or at least do well and pay while you wait too. How about a name like Realty Income Group?
They call it the monthly dividend company. If you're looking for high income that's also
growing, of course, I got that in my long term.
They're paying great income.
I think I've sold it by now.
Realty Income pays 6.3% because it's retreated this year with the group.
Some of it.
It's one of the dividend aristocrats. What does that mean, Nicole? It has increased that dividend every year for at least 25 years. So you get 6.3% plus it's going up. That's better than any bond I've ever heard of, which has fixed income payout.
That's a great.
So where are they developing their cash flow? They're
great divvy stock. It's like half divvy, half growth.
It's triple net lease, which means the retail company is responsible for the taxes and the maintenance and all that good stuff. They have over 13,000 properties across 49 states. No one state is more than 11%. So diversification is the word. They're also focused on the types of tenants which are not going to be wiped out by e-commerce. For example, convenience stores, dollar stores, things like that, where you don't go online to substitute for going into having the in-house retail experience. So it's a slow grower, but you're also getting that check monthly, as opposed to most companies pay their dividends quarterly.
Right, understood. Michael Bappas made the point about how long these kinds of things can go out, and that's how we'll watch how much it affects the market. I mean, do you have certain levels on the S&P 500 that you're watching? There's been talk about the Santa Claus rally, because then we'll figure out really what the Fed is doing or not doing.
So we don't like to have short-term targets, but we are optimistic about this quarter because, as you point out, you often have the Santa rally. Historically, Q4 has been the best performing quarter, and November and December are the best performing months. Remember, policymakers want to be nice to the economy because there's an awful lot of players out there, particularly the retailers, that make most of their money in November and December. And of course, we're going to be past, an upcoming election period here in November. Not big elections, of course. And we do think that the Fed is close to ending their rate hiking campaign. We don't know exactly when that's going to be. Who knows? This Israel thing could be the catalyst for them to back off on the hawkishness. But if we just get a little stabilization in interest rates, I think people will jump back into stocks.
Understood. And last but not least, is there anything I'm leaving out here? I mean, we have a stronger dollar. You're certainly seeing a little flight to quality.
Forgot what day these are like at the end of the day.
They're going to gold today. We're up $23 on gold. They went to the yen.
Or they have to have the move happen pretty quick.
Well, I would urge investors out there not to overreact to the headline news. I mean, it could be resolved within a week. It could go on forever. But I mean, if you're in equities, you need to have a multi-month, if not multi-year horizon, and therefore not try and get too cute
Closing these if we break that channel to the upside.
If you have too
Be
much
good
exposure to
opportunity for puts or
I'm looking at these
calls.
defense stocks. I love the defense stocks, but Northrop Grumman up 11%. Maybe that's a stock you want to trim a little bit because I don't think it's going to get 11% more business just based on this weekend's headlines.
Right. It's a big move. You're right. David Dietz, great to see you.
Dang,
David
that flop.
PPAC Private Wealth Management. Thank you, David. Coming up, well, we'll take a look at Bitcoin because maybe everybody can have access to a spot Bitcoin ETF very soon. We'll talk a little bit about that and cryptocurrency. The watch list will be right back.
You just could not let that go. Okay, I'm out. Odie. Spades, come on. Whack. tried to bet more than that. It's so annoying that happens. You called. Yeah, it's sevens, no way. Wow. Oh, wow, wow. Too bad. Must have been so stoked and I went all in. He's all tilty now. Oh, tilty. Be a double top there. I just didn't want to be in those dailies anymore. Add some here. Gonna scale in. Just flush though. It is so loose. Hold it. I'll give those to him. I guess the analysis is right, it is rolling over, but I'm gonna dance around here for a bit. This late in the day. Dailies are sketch until the move is confirmed. On its way. GME's up in a quarter. Double top there on SPY. Nice.
Grayscale ruling when BlackRock launched its application to create a Bitcoin ETF, and when Grayscale won its lawsuit against the SEC, that's when Bitcoin hit 30,000. People were excited. The Bitcoin ETF is coming. Well, here we are a couple of months later. It's still not here. And so, yeah, I think people are treading water. They're waiting for this ETF.
And is there any changing of the guard in sight for that role?
Gary Gensler is in office until 2026.
Until 2026. So last but not least, when you look at these opportunities, I mean, do you think everybody should have some sort of digital? I mean, you could do this through Coinbase. You can have exposure through PayPal.
There are so many ways,
different ways,
including
to do this.
Grayscale,
What do you think about that?
Bitwise. Many of these products are available through Schwab. It's very easy to add to your portfolio. It makes a lot of sense. These assets.
What are some of the top ones that people do other than Bitcoin itself?
I would say GBTC, the Grayscale Bitcoin Trust, and BITW, the Bitcoin Top 10 Crypto Index Fund, which is like the S&P 500 of crypto. It's the top 10 coins. These are both available from Schwab and easily added to your brokerage account. Easily, you can rebalance, you can dollar cost average, you can do tax loss harvesting. Very easy to manage the portfolio. And the good news is that you can invest now without having to wait for the ETF, because when that comes, you can expect a big price increase. Better to invest today before that happens.
And you have the halving of Bitcoin in April of 2024. Sometimes that's a catalyst.
And
right?
Historically, that has always been an extremely bullish event for crypto.
Yeah, I was just thinking about that, though less so as it gets halved each time, right? Each 4 years.
It's still dramatic.
Okay, good. So I'm glad we mentioned that.
Let's keep in mind that Bitcoin is still the best performing asset of the year.
Rick Edelman, good to see you. Thank you for coming. Everybody loves to talk about crypto because they have high hopes for what it could bring in the future, right?
Indeed.
All right, we'll have you back and we'll talk more about it. Rick Edelman, thank you for being here. Digital Assets Council of Financial Professionals.
Why I'm calling this.
Still ahead. We're in our second half of the show. What about back to school shopping season? Right now we're at Halloween, Thanksgiving, and then the holidays.
Yep.
So
Yeah, I got 2 pair.
really thinking? What kind of behavior
So lucky.
can we expect? As we head to break, take a look at winners and losers.
You winning that heavy pre-flop? Awful hand. The flop 2 pair. Like him down there. First little test here. I'll take a little profit. Oh, those are actually up pretty good. Easy. Got quite a ways to go for VWAP if it's trying to do it. Full house. Oh my gosh. AMC 3.6. 0.8. I bouncing there a bit. Kind of a horizontal channel building here. Give it time to keep rolling over. 20 minutes to power hour.
It's going to be the next key level for the bulls to get us above. I want to point to where we are and how we've just recently come off the 200-day moving average. That test of the 4,200, 4,230 level coincided with that longer dated, inching our way back up towards this 50-day moving average after some selling off the July highs here. You can see as rates have been on the rise amidst some of the big news we've seen in crude, the recent run up to 95. We'll get into that in just a minute, as you mentioned. But here you can see the Russell small caps have been coming off. I think this is where we need to focus our attention here this week, especially if rates continue, because if you remember, it was earlier this spring that we saw a big move up in yields, ultimately raised some concerns about some of the regional banks. And let's keep an eye again on small caps. This is where the real weakness has been. Recovering today, though, if higher, it looks like the Russell will be up 4 days in a row here right now. As you mentioned here, the S&P, the Dow now has gone from a negative 80 points are now positive by almost 200 as we speak here, Nicole. Quite the run up here this Monday morning, this Monday afternoon.
Yeah, and I know
Happy
you're going to
Monday.
touch on oil here, and what are your thoughts as you see the jump today?
You know, I would have expected further gains considering the situation and recent developments over the weekend in terms of what's going on in the Middle East. We saw a move overnight up to 87.24, but surprisingly, follow-through has been kind of limited. Now, I think this is aiding in that bullish narrative, right? When we see very up in the opening session at 87. The concern is it's going to follow through. We'll see more buying amidst the uncertainty and the unease that investors are feeling right now. Traders are feeling with the recent developments, but the fact that it didn't, and you can see how it mostly been sideways, I think that's what's helped the indices kind of regain composure here today. Taking a look at crude oil, the recent runoff we've seen from 95 down to 81, Nicole, and then the bit of a bounce back here. You can see the news-related bid, but again, sideways and somewhat limited in terms of ability to kind of march higher at this point. I did want to point out to where we are relative to the 50, the 200-day moving average, because this 95 spike high that we saw a couple weeks ago coincided with the highs from last fall. You can see we didn't spend a lot of time up there, Nicole, recently revisiting and trading back down below the 50-day moving average, but working our way back above that level today.
All right. Thank you so much, Ben Lichtenstein. Great to see you.
Lichtenstein.
Well, investors are facing elevated inflation, a tight monetary policy.
Oh my gosh, dude, this guy's getting so buggy.
And they're depleting their savings and funds, but they still have shown resiliency. We've had a strong back-to-school season. And how are we feeling about the holiday shopping season? Chris Graja is with us, Senior Securities Analyst at Argus Research. Thank you for being with us. So we know that the Walmart CEO has talked about the back-to-school season. It started strong. Is there anything that we can
New high there on SPY.
Into what we might see for the holiday shopping season, Chris?
So yeah, I mean, back to school is usually a pretty good harbinger of what's going to come for the holidays. I mean, if people are spending and willing to spend on important things, that's usually a pretty good sign. You know, it looks like the offering of Halloween stuff in the stores also signals that people are spending on what's important to them and probably what's important to their kids. You know, bigger ticket discretionary spending may be a little bit tougher.
15 minutes to power hour.
But I think right now the key takeaway really is that the unemployment rate is low, people are employed, the economy is growing, and despite all these headwinds that we can maybe talk about later, I think people are going to want to make the holiday a special season for their family, within some bounds.
Right. It's interesting because some of the retailers, I had the numbers that I was looking at last week. Some were hiring similarly, even a little less or similar. Amazon was hiring more year over year. Sometimes the hiring of how many workers these retailers need can be an indicator of what kind of shopping they expect. I mean, you said you expect 3% this holiday season. What does that mean?
5.
Well,
Nice.
the average over the last 20 years is 4%. Last year we were at 5%, and then in 2021, bouncing back from the pandemic, it was 14%. So, I mean, this should be a,
Some more tapering up here.
Below average
More rolling
year,
over.
But we've got a really strong comparison.
Takes time to reverse a trend like this.
How you do the calculation. I calculate it on the same way the National Retail Federation does. So that excludes restaurants to become part of core retail. So, as you remember back in the pandemic, people weren't eating out. They were spending more at home. You had some, more acute food inflation. So that was boosting up the grocery category. And I think this year, some of their spending is going to go to
Good morning
eating
and
out and
heavy.
services and spending away from home. That's going to depress the overall holiday forecast a little bit based on the way that we in the National Retail Federation.
Yeah, what kind of spending are you expecting? I mean, are we going to see it on big ticket items like TVs and electronics, or is it also going to be on experience and travel and stuff like that?
I mean, I think you will definitely see some spending on travel and experience. And I mean, preliminary thought, I mean, I think when you look back at Friday's employment number and the amount of spending or the amount of hiring in, hotel and hospitality, maybe that's a forward-looking expectation that some of that trend is going to continue. And then I think the other thing that's out there, you talked about shoppers depleting their savings. I think one of the reasons you're seeing a little bit higher spending in services is because wealthier people still have some of their money left. Some of the lower income groups have spent through their pandemic savings, and they're feeling the cash pressure a little bit more at this point. So they'll be more value focused.
Right. Tell me about the buy rating on Williams-Sonoma. Yeah. Tell me a little bit about the buy rating on Williams-Sonoma.
I mean, that's one I've liked for a while. I think I was a, kind of early bull in this cycle on the stock. And I love the level of innovation. One of the things they've done so well is that, they started with the core Williams-Sonoma business. They added Pottery Barn, which was a teeny tiny real estate play. They've grown that into a big business. They've added West Elm that's been very successful. They've got a B2B business. They've got a kids business. So I think the level of innovation is really terrific there. And they're one of the few companies in my universe that's growing organically. And they also have a very good, from their days as a catalog retailer, a very good presence online. So they're using their stores strategically as well.
All right. Chris Greya, Argus Research. Thanks, Chris, for being with us. Appreciate it. Coming up next, our panel is ready to talk about some of these food and beverage stocks that have been under some pressure. Could the uptick in the weight loss drugs have a material impact on snacks and food and soda and such? Let's have that discussion next.
Hmm. High base is good. I don't think it warrants $600,000 pre-flop, especially offsuit. He's getting super lucky. Brad's holding up nicely. See up 3.6. The high of the day.
They have, because we did have an inflationary environment. You can't keep doing it. It's like companies that cut costs. At some point, you have to have organic growth. Mel, Casey, what are your thoughts?
I think it's a good point about pricing versus the actual volumes. If we look at Pepsi, which is the name that we like, we haven't seen the volumes grow there, and the growth has all come from pricing. But that's probably the best way to play this, which is in terms of diversified companies. There's pure plays, but Pepsi is a combination of both snacks and beverages. And also, if you look at the market reaction, one could argue that the growth profile has been wiped out from the stock. There's nothing really baked in. We've gone from it having a premium valuation to both the staple sector and the overall market, and now it's lost about 4 turns on forward earnings. So I would say that we would be getting growth for free.
So do you think, Mel, that there are opportunities in this group? Are there certain names that seem to have a better footprint, better margin, more pricing power and such, Mel? Are there certain names that seemed likely to do better than others?
Yeah, for sure. So I agree with the other guest. It's very hard to quantify what's going to happen with this breakthrough in the new drugs. But keep an eye on the earnings and actually see what's happening on the ground. Beyond Pepsi, take a look at McDonald's. That's technically in the discretionary area, but it has a lot of features of the staples. And McDonald's has also had a very similar market reaction. The idea that people are going to start being a lot more health conscious, and I applaud that optimism about consumer behavior. But these are very large markets globally. It'll take a long time to see that kind of change in behavior. And the other thing to bear in mind is, if we are going into a slower economic environment, possibly a recession, that's when these types of names, snacking companies, fast food, they tend to do better because of the price points and the price sensitivity that people have to have. So McDonald's is also looking pretty compelling. And I'll throw another one in there as we're talking about being more health conscious. Look at Diageo for spirits and alcohol. It's had a really rough year, tough comps from COVID. And there's a little bit of that sentiment creeping in, people are more health conscious. So to that, I would add that it's tough to imagine that people are just going to completely stop drinking. And if people are being more health conscious, Diageo is actually benefiting from that in terms of seeing
people rotate from beer towards mixed drinks, spirits, where they're perceived to be more calorie conscious.
Tom, you're mostly underweight consumer stocks at this point. I will say I did go into McDonald's recently and asked for a salad with the grilled chicken. I used to love that. They said they don't make those anymore. But I'm sure there's other healthy choices there, and there's some great, delicious choices. Let's not leave it aside. It's great. Tom, tell me, you're underweight the group. Are there names that sort of stand out that you're watching?
AMC high of the day.
Or are there just too many headwinds?
Breaking up out of that channel.
To consumer.
Shoot,
I
man.
think we're overweight companies that have
See if it rejects this resistance at the top of this channel.
Growth opportunities, which is
a bullish break.
Tricky in the consumer space, where probably consumers are going to be spending less on goods, more on services as a percentage of the pot, and moreover, you got a whole slew of companies struggling with margins as it is, and a lot of the staples companies have a decent amount of debt behind them.
High of the day there on SPY.
I'm just not sure. It's another headwind that I'm not sure is priced in, that they could be seeing further increases in interest costs. And so I think in our mix in general, we're looking for companies with a little more quality to their earnings, a little bit more structural growth, and a little bit more of a little less in reliance on this margin story for their growth.
Okay, good to see you. Tom Graff of Facet Wealth and Mel Casey, FBB Capital Partners.
So I might be respecting that.
See. That's going to do it for us here on the watch list. I'm Nicole Petalides. Thanks for being with me every single day, 11 a.m. and 2 p.m. right here on Schwab Network, live from the New York Stock Exchange. Keep it right here. Market on Close is next.
He's respecting it for now. So respectful.
I was born on the south side of Chicago.
Added one put there. That's all I have buying power for. Ooh, not a minute of clubs. I guess I could have put them all in. I thought that was. Okay, first profits will be at the bottom of this channel. Here's power hour. Ramp.
I'm Oliver Rennick. We've got 1 hour left in the day. Stocks are ramping up. We've got some nice follow through to the solid close from last week as equities continue a bounce here and maybe a comeback perhaps.
Nice check. What's that guy calling with?
As suspected this morning on MTL, the dip got bought. Why? Well, bonds are rallying. That's a start. Even if not for ideal reasons, geopolitical conflict put a bid into bonds early, but also some Fed commentary that seemingly is erring on the side of slightly dovish.
Here we
go. Careful how
go.
we use those terms to describe Fed speakers because there's, of course, no talk of cuts, just no talk of hikes either, especially when it seems some Fed members believe that the bond market is doing their work for them. But then, of course, that kind of creates a weird scenario because if yields are rising and the curve spreading and widening out again, is doing the Fed's work for it. But then when they say it's doing the work for it, bonds rally and yields go back down, and so less work is then being done for them. Kind of get into a weird little circular situation there. But for now, the market has one main foe, and it's higher yields. And so regardless of reason, when yields are down and the bond market's rallying, the market's probably going to find a way to like it. There's another thing actually happening today that I would argue, not to be callous about what's happening in the Middle East, but just taking a pure market perspective, actually kind of a good way to see a functioning, healthy market respond the way that it is today. So let's just go through the movers here because it's very clear the way these pieces fit together. That's basically the challenge of what I try to do every day is try and figure out where the pieces mismatch in the market puzzle. Nothing really
power volatility
today. It all is perfectly pieced together. Look at the Israel ETF down 7.25%. Don't really need any explanation for that, right? The market has homed in on the most at-risk companies or perhaps just any connection to the region where there is conflict and sells it off. Goes without explanation. Crude oil goes up. Probably doesn't need much of an explanation there either. Get too much of the Middle East generally, even if Israel's not an oil-producing nation really. Still, it's the Mideast. And so it's oil sensitive. So you get a pop in crude. Especially combined with last week's drop in crude oil prices, market was probably primed for a little bit of a pop. And so you get a catalyst and a pops. So far, so good. Everything fits together very easily. Crude oil prices go up. There are ramifications. Things like airlines, cruise lines go down. Once again, everything here makes perfect sense. Then you have defense companies rallying. Aerospace and defense. 4.5%. There you go. We've heard the case from a lot of investors here on the show over the last 8 months about how those companies were beaten up unnecessarily by the market, so perhaps they were also primed for a pop too. But either way, regardless of what happened leading into today, if you knew the news overnight, this is exactly how you would describe the market. Israel stocks down, crude oil up, airlines down, defense companies up, energy stocks up.
I like that
the
raise.
Fact that the stock market here started lower and there was a bid into the dollar and bonds at the same time tells us that our risk off and risk on spectrum is pretty clearly divided. You had stocks down, you had Bitcoin down early this morning, clearly risk off tone. And then as the day went on, investors came in to buy up equities and particularly U.S. stocks and big tech companies that shouldn't be affected by any of that news from overnight on the geopolitical front. Especially you get some of the Fed commentary suggesting that they don't need to hike anymore. And everything today pretty much fits right into place.
There you go. We didn't even hear the Fed speaker
talk
about not hiking anymore. That's definitely a big catalyst. But that's to be expected with war.
That's probably reflecting
bad news is still good news.
2-year yields on the shorter end more controlled by the Fed. It's a little bit of dovish commentary from Federal Reserve and your yields come down. And then the 10-year yield also comes down a little bit. It's a pretty big move. 10-year futures are rallying by 1%. 10-year back down below 4.8. It doesn't look like much on this chart, the blue line there for the 10-year yield, because it's moved so quickly. But the point here is that both yields come in, and bonds functioned as a safe haven in the middle of a geopolitical event. That may sound like, okay, obviously it should be that way, and that's the way bonds are supposed to function. But don't forget, last year, that wasn't the case. This is what I've really been harping on, which is that the bond
Finally getting some hands.
has not been acting terribly abnormal.
Back-to-back hands seems suspicious. 3 hands in a row, 4 hands in a row.
Hasn't been any big sell-off around auctions or concern about oversupply.
Break out there.
And so bonds catch a bid in a risk-off day, functioning the way they should.
Oh.
Didn't happen that way last year, so this is pretty encouraging.
No flushes, no straights. Well, there's a straight.
Point out is the dollar too. Dollar caught an early bid as well, but then faded, and now you can see we've got going on about 4 red candles for the dollar.
You might have a straight actually.
Kind of starting to get interesting. Greenback losing a little bit of that momentum.
Oh, failed straight, failed flush.
And inflationary worries percolated back up to the top of investors' minds these last few months. Might want to keep an eye on the dollar.
I like how SPY's still chopping around up here.
So, then maybe some of the concerns over the last couple months.
Not the shilling I wanted.
Let's not get too ahead
Got excited with
ourselves
that
just
big
yet.
red couple candles, but
S&P's really
I'm
fighting
not,
to
baby.
get above 43.50 and hold it there this afternoon. Don't miss the close of this show. I'm going to outline some charts.
Same thing happened on Friday, the tapering. Remember? And then I closed, and then we got it in the last 5 minutes.
Spring and Caroline Woods and Kevin Hanks talk about the session.
I can afford to hold these though. I was fighting that a lot on Friday, so I've been fighting it today.
Obviously, some
It
of
was
this
long.
stuff seems to be pretty acutely tied to Israel and Palestine, but on the
I
other
didn't
hand, we
get
have some
stopped
Fed
out on my
commentary, too,
longs
to
like
talk
I did
about
yesterday
moving
or Friday.
forward. So what do you think is the main driver of the action here from a macro perspective?
Yeah, Lori Logan's comments this morning were, quite, I thought they gave the U.S. market, remember, these markets are all independently traded, some comfort in terms of the overall plan for interest rates. When she said the term structure of bonds and the higher yields are doing a lot of the Fed's work for it, and they may not have to go further. Remember, Lori Logan, she was basically had the mantle of one of the most hawkish of the Fed members. So for her to start hedging, and you and I alluded to this last week when we said some of the rhetoric out of the Fed was switching from higher to just longer in terms of interest rate hikes. Like they were done, but they needed to leave them. Now the next question. So I think that, even though early in the morning, the 3 risk-off indicators that we look at, the VIX, bonds, and dollar, were all surging higher. 2 of those 3 have come back to almost unchanged. Now the bonds are still strong, and yields are going to be significantly lower. But the other 2, like you mentioned, the
I don't like there's no good patterns up here right now. It's just chopped. There's no like a clear head and shoulders being built. Like you kind of have a little one, but it's pretty disguised.
Some pretty significant moves here from a risk-off day, clear risk-off day, to a not so risk-off day, and a day where we've just got some significantly lower yields.
Indeed. It's kind of like a path versus destination, right? Where the market seems more attuned to the destination, where yields arrive. How they got there? Sure, it might have a couple catalysts, but bottom line is they're down, and the dollar's not up anymore. So we get a pretty nice response from markets. And it does seem like, Carolina, it's a pretty clear-cut case of how this event is affecting sectors and leadership on the day that hasn't really changed throughout the session too much.
Hey there, Oliver. Yes, it's interesting. It seems like overall the stock market kind of shrugging off the geopolitical concerns right now, but there are definitely areas of the market where it's having an outsized impact, as you said in your intro. I was hearing you talk about it. I'm like, well, I guess you don't need me because I was planning on reiterating basically everything you've just said. But I think if you just take a look at the S&P 500 and take a look at the biggest winners and the biggest losers, it really tells the story. At the top, defense and energy, and at the bottom, airlines, cruise lines, those companies that are are fuel dependent, but energy, of course, the top performing sector in the S&P 500 today as oil prices rise 4.5%, trading back at around $86.50 a barrel. In turn, we're seeing companies like, taking a look, Hess up 3.6%, Occidental Petroleum's up 4.6%, ExxonMobil also having a big gain today, up about 3.6%. So certainly getting a boost there. That's obviously putting pressure on companies that are dependent on energy, like airline stocks. Those are having, those are some of the worst performers in the S&P 500 today. Just kind of going through the list here. United, Delta, American, the top 3 worst performers in the S&P 500. And they've already been under pressure really since the summer as we've started to see some domestic softening in domestic airline travel demand. Of course, there's the higher oil prices that we can attribute it to as well, and higher labor costs. And we've seen a lot of cuts to guidance lately. Of course, we'll hear from Delta later this week, but these geopolitical tensions certainly heightening fuel cost concerns for the airlines. Also, they've canceled, some of the major airlines, the international airlines have canceled flights to Tel Aviv because of the attacks that are going on, and the FAA did warn pilots to exercise extreme caution in Israeli airspace over the weekend. So definitely some headwinds there. And then, of course, the top performers in the S&P 500 are the defense stocks, which as you've said, has been really beaten down because this is a market that hasn't really focused, on
kind of have a shoulder over here.
Those that are more defensive in nature, like, hey, defense stocks. But if you take a look, Lockheed Martin up almost 9% today. L3Harris up more than 10%. General Dynamics is up almost 9%. Northrop Grumman up more than 11% today. Huntington Ingalls up more than 9%. So you're definitely seeing very clear winners and losers in response to the conflict going on.
Yeah, good rundown there. Some of these moves really big now. Double digit for Northrop, Lockheed, big rallies. So the market also finding strength in the really important market cap stuff too. Tesla was red this morning. Now it's positive. Apple too. I mean, same story around big tech. The fact that we closed last week solid and didn't have a big bond crash after employment, and now we're getting followed through, Kevin. I mean, these days I feel like 1 or 2 more like this, and suddenly we might have something for the bulls.
You know, the stock market and the economy sometimes trade in different ways. And this stock market, this U.S. stock market that has been so hyper-focused on higher yields for so long, got some good Fed speak and got some good bond movement, and the dip buying continues. Remember, don't think can't rally in tough times. What's the link between tough times and a stock rally? Lower bond yields. True. And that's what we're getting today. Big relief in the bond market. So do I think the stock market's going straight up? Probably not. October is historically a choppy month, but it's not by any definition a bearish month. It's choppy, but often finishes very bullish. So I'm paying attention to the choppy markets, but doesn't mean it's going straight down or up in that matter.
Yeah, good context. Last month was the rough one, statistically, seasonally.
Yeah.
October not great either, but so far, all right, not too bad. Thanks, Kevin. Thanks, Caroline. Appreciate it, team. Let's bring in Jimmy Lee, CEO at Wealth Consulting Group. Jimmy, today is kind of like one of those days that brings pre-COVID feelings. Before we were hyper-focused on inflation and some of these kind of asymmetric risks and stuff. This used to be the type of day that would be pretty common when I was writing the Bloomberg stock wrap some years ago. Do you think that tells us that perhaps this market's in a healthier place?
Great to see you. It's been a long time, Oliver. And, I've been, my base case is that I think the consumer has been strong and would keep us out of a recession. So from that standpoint, I think that the market's in a position to potentially have a nice rally in the fourth quarter. With that being said, with what's going on with the geopolitical risk, I think that investors should be set up for potential volatility in the near run. But I think that, if we get through this situation going on in the Middle East without it escalating into outside of the current areas and outside of Iran, not into Iran, excuse me, then I think that investors so far think that this is going to be something that won't cause too much havoc on the markets worldwide and the economies. So, I think that we've been legging into longer duration on our fixed income, gives you kind of an idea of where we're positioning, and we've been long and overweight on some of the cyclical sectors. So, yes, I hope that we don't go into recession next year, and I'm hoping that we do end up getting a rally before the year's up.
I like that description of which style you're in right now, Jimmy, because the economy, of course, has downright shocked everybody and its resilience, its strength. Last Friday's eye-popping jobs number. So I think you kind of answered some of this question.
All right, breaking that channel.
Best way to play that? Feel free to get specific within that cyclical
get some move to safety.
If you like.
Well, we're overweight industrials. We're actually overweight tech too, and so
I don't have any more buying power to add to these puts.
So much of what's going to happen in the short run is going to depend on what the Fed does and how investors play that. But we know that we're near the top. So if the Fed doesn't raise rates and surprises investors a bit, then I think that could help fuel a nice rally with interest-sensitive sectors such as tech, real estate too, as real estate's rallying today. But we think that investors still should be very diversified and stick to quality companies that have good return on capital and still create cash flow. I know half of the economists that were predicting recession this year are still just pushing it out to next year. And a lot of analysts are predicting a big correction, which I think we could get, but I think the correction would happen in equities after we get a substantial rally from here, setting new highs for the year. And next year, if we do that, I think we could see some profit taken on equities and a correction. But for now, I think investors really need to be patient and they need to have a plan because right now we could be set up for volatility
out there now.
If the situation in the Middle East doesn't calm down.
Fold.
Okay.
Man.
When you talk about tech and how it meshes with the cyclical approach, do you have to be more specific? Do we have to be more specific as investors when it comes to tech now versus the big COVID rally where it was high beta, it was growth of any kind at any cost? Do you
also,
think
this level down here potentially could
day has passed,
potentially
has
bounce
that
on.
Ship sailed, or can we just pile back into broad, general, high beta tech growth funds?
I think generally speaking, high beta tech will probably do well, but I would be, just like this year so far, I'd be more selective and active and look for companies that are taking advantage of the themes that are playing out right now, such as AI, and companies that are doing better in terms of potential for returns going forward for the next 12 months, and companies that are looking well for the next earnings reports that are going to be coming out over the next few quarters. And so I would be a little bit more active than just buying tech in general. And again, I would stick with companies that are looking with more high quality, technicals. And so I wouldn't be generally just investing, Oliver, in there.
Got it. Talk about the duration part to me a little bit here. What is your view on the connection between yields in the higher for longer environment? Does higher for longer put a floor into where yields are? Does it put a kind of natural bid into rates and kind of a natural selling of rallies into bonds? Or do you think we can stabilize in the bond market even if there are no cuts or any actual reversal of policy?
Well, it's very interesting, with yields where they're at, and the idea of adding duration is that I think it's a longer term trade and an allocation move, because we do believe that in the short run you're going to see a lot of volatility with yields, and bonds could continue to lose value potentially. But with that being said, I think in the next 1 to 2 or 3 years, I think bonds are going to be a place that you can get a nice return on your money and get some of the principal back that a lot of bond investors have lost over the last several years. And so I do think that rates are going to stabilize. The consensus is higher for longer, but if we get a surprise to that, and if inflation data comes in much lower than expected sooner, then I think the Fed has not been very good at predicting what they were going to do on the way up. The Fed could potentially move that dot plot game to lowering rates much quicker than what's predicted right now. And if that happens, then you'll see a rally in bonds.
Got it. Okay. And the stuff on the edges, Jimmy, gold and alternatives, where are you talking about putting that in with clients right now? Is it necessary to have some wild cards in the portfolio?
Yeah, we're not really a buyer of gold today, even with all the geopolitical risk going on. But we have been very active in some of the alternative areas. You know, with all the concern about commercial real estate this year, I think with fresh capital, Oliver, investors for both equity and debt have opportunities in the real estate sector going forward. And I would say that the private debt areas are still very exciting. Getting yields, you know, in double digits for investors with good credit and with collateral. So as the regional banks aren't lending anymore as much as they were before, I think the private market is really taken off, and you're getting opportunities to get nice yield that you haven't seen in a long time.
Got it.
Or ever.
Yeah, true. Thanks, Jimmy, for the catch-up. Good to see you again. Appreciate you coming back on the show.
Thank you.
Yes, sir. Jimmy Lee, Wealth Consulting Group. All right, when we come back, let's dive into some of those defensive groups and how to think about it. Today, you've got some pretty clear examples. Defense being one defensive group, but last year it was stuff like energy and inflation linked that worked. Dave Mazza joins us next as we talk some ETFs. Stocks still bid. Nice comeback here today.
Testing the bottom of that channel again. Probably should take some more profits. I don't know. I'll leave it. Just need to break it. Confirmation break. Yeah, we'll probably get a bit of a sell-off. More or less consolidating than a flush. There's some profit taken. You got VWAP, I mean, it's way down here. I don't know if we'll make it down to VWAP though. That'd be pretty awesome. But like Friday, it might just happen, you know, could happen later. Could happen last 5 minutes, could even happen extended hours. One day I was trading, waiting for the move all day, and then it actually ended up happening after hours. And I didn't hold my position. I could have held too. Good lesson though. There's a break on that channel. I'd say that's pretty good confirmation there. Wait for some volume and fleshy.
It seems like.
Yeah, no, not until we're focused and proud of being able to offer really unique solutions to investors and traders. What I think is interesting today is we look at this market setup. It's kind of a market for everyone, right? Yeah. In the segment before, we're talking about all the positives and all the negatives. Maybe that happens in every market environment, but especially right now today, there's so many question marks about what is going to happen when it comes to the Fed.
Not broken it yet.
Rates. But let's assume for a second that the interest rate hiking cycle is done, or maybe there's 25 basis points left. The cracks in the financial system started a lot sooner this time around than they did previously. And now the Fed, I think, in markets is a little bit skittish about what 2024 begins to look like. In the near term here, though, and I think today's rally is really emblematic of that, is investors are going toward the new defensives every time and anytime there's question marks about what that looks like. And in this market, the new defensives are really big tech and the Magnificent Seven. And our Big T ETF is one of them that provides precise exposure just to those Magnificent Seven stocks.
Yeah, that's BIGT, right? Which has been around for
more support.
months, and what, spring, right? So It still is in pretty good shape here, hanging out pretty near the highs, about 27% since the debut. Wow, it really does show how resilient the group has been. And that's just straight top 7 market cap, or is there any discussion on how we define what is magnificent?
Well,
it should be like so prepared on Fidelity because it takes so long to open and close positions.
When it comes to stocks, it's come to mean some of your OG FANG names plus NVIDIA and Tesla. And we actually recently added NVIDIA and Tesla to this ETF based off of trader demand and folks saying, hey, when we're looking at what's going on in the market, it's not just your Apples and Microsofts and Alphabets. It's really NVIDIA and Tesla that matter too in this space. So we introduced them into the portfolio recently. Even before that, though, you can see the resilience of the group and how strong it's been through what's been a
this is a bearish setup, so
no one I think was expecting equities
hopefully
to be as
comes
strong as they were
today.
Or have been to date, even with some of the wobbles
30 minutes to go.
But this group in particular, it actually may be more attractively priced as an entry point than it was before. I think earnings season is going to be really important for these names going forward. They're expected to have better growth than I think we've seen in the past. Now, NVIDIA.
Yeah, it was like this though the other day where we had this tapering top and then just that crazy, ridiculous buying algo showed up and ripped it out of there. So that is always a possibility.
When it comes to bonds, but
say less likely,
tech,
but
the Magnificent Seven have served that. Old defensive sectors like your consumer staples, utilities, they've really been out of favor. They're too interest rate sensitive, I think, to provide that level of certainty that traders are looking for here. And that's why when things get shaky, at least in 2023, it's people are flocking to the Magnificent Seven.
I think we bounce for one last support here at 432.61. More on that right shoulder.
Which goes back to the beginning of the year, now up about 19%. It's peaked quite a bit earlier than the Magnificent Seven, so they certainly have had a little bit more lasting power, the big tech companies. But tell me again about this strategy, because I do think that is one that has gone a little bit overlooked, the appreciation for cash-heavy, high-quality companies. As we just heard Jimmy Lee talking about quality, it feels like this is sort of your guys' proxy for quality.
Yeah, I think you're absolutely right. When we think about what tends to do well in times of uncertainty, an area in particular that has done it time and time again, really over decades, is companies that have consistently grown their earnings, consistently grown their cash flow, and that have rewarded shareholders through dividends. Interestingly enough, investors could stay in cash these days and make 5.5%, right? Assuming you pick the right money market fund or ultra short-term ETF.
Skype Club.
But you know that's not going to really come with any total return basis.
No, just straight.
What I think is interesting is folks begin to take a step back and start planning for a multitude of market environments.
Sky Clubs. Thought he might be trying to
maybe boring.
Provoke the raise.
Just go with your an entire portfolio of consumer staples or utilities, but have sort of those elements of consistency is what may matter more. You're right. Jimmy Lee was talking about quality. It's been a theme that's gone in and out of favor. It means different things to different folks. But for me, companies with high return on equity, low earnings variability, meaning quarter after quarter, are we expecting them going to hit their numbers? Are going to have one quarter of 20% growth, the next down 20? Companies that can do that consistently are likely going to be rewarded more here, especially when there remains questions about what does inflation look like and what does the pace of interest rates continue to do? And does at some point that come for the consumer? The consumer has kept the U.S. equity market in the game all year. That's why it's been a big outperformer. Now, at some point, I think that likely begins to pull back, perhaps, in our opinion, likely in early 2024. But for the time being, that's why we think investors might want to look for resiliency in the near term. If you're super concerned, I think we got the big tech names can serve that for you, the Magnificent Seven with Big T. Mm-hmm. And then outside of that, companies with more consistency, dividend growers over the very, very long term could be that as well.
A lot of people look for that in the energy sector. Wanted to talk about that with you real fast. Obviously, crude's up today. You've got a fund that you just put out there that focuses on natural gas, though. The producers of it are stocks connected to LNG. Tell us about it, Dave. We've got about a minute.
Yeah, no, I'll make it quick. LNGG is really the world's first ETF just focused on companies globally involved with liquefied natural gas. This is a transition fuel, right? Everyone's excited about the focus of renewables and solar and what have you. That's going to take decades to get there. We're still going to need carbon intensive source of fuel. Actually, if you look from an emission standpoint, though, natural gas is one of the cleanest or greenest of the carbon space. And we brought LNGG to market to gain access to companies that are involved with this space. Really interesting portfolio, has a relatively high yield. We're expected to have a relatively high yield, about 4.5%. So for investors looking for an emerging theme, something that maybe they haven't heard of, that's been forgotten, LNG stocks can be that for them.
All right, I like it. And a little separation between crude and the natural gas to help us to distinguish the parts of the energy market and how to get exposure to it. Dave, thanks for the rundown. Appreciate it.
Thank you.
You got it. Dave Muzzlebrand, Hilton Investments, LNGG, the new natty gas-focused equity fund.
Yeah, we go.
Let's take a look at some options action from today. It's all bullish across the board. Alex Coffey's
Maybe the 10-minute Fugazi move is what we're looking at.
Even in Delta Airlines going to buy a dip, and someone taking a little bit of extension to the bullish side on Pepsi ahead of their report this week. Be right.
There it is. Breaking the channel. Fine horizontal support there. I'm gonna trade sideways here for a bit. Jeez. Applies pocket kings. Applies a queen. 2 pair. What is that? 5-4. Oh my gosh. I need a straight. What did I get? 5. Oh, I didn't get the 5. Pocket 10s? What are you raising? What the heck? Okay, first price target, I guess, would be bottom of this channel. While I leave this table, I have 19 million, scaring everybody off. Oh no, it wants to trade that horizontal level. The river gave him a queen. Probably up top pair here, unless this guy's slow playing. Might be a straight. Yeah, you got another queen on the river. What that river queen? AMC up almost 5% there. Break the horizontal support. Yes.
Oftentimes, those two things go they go two ways. So either this continues to get worse and we can see continuations of moves like today, or it becomes resolved relatively quickly,
or
at least tempered, and you get almost like a snapback reaction as well. So a trader who's playing for that may see opportunity in kind of the shock sell in Delta, something like that today. However, the fact that they're just going right through earnings to me tells me that this trader also has a feeling of confidence going into this quarter as well, and the message that a company like Delta may have to say on their conference call.
Okay, yeah, I like that theory, because I also just feel like the last 3 months has been so brutal to the airlines, and I haven't quite been able to figure out why. I mean, I get part of it's come from the crude move, but we chopped a good bit of that off the past week before today, of course. So it does seem like it's very oil related generally, but consumers still healthy, jobs still plenty.
The flash.
And these companies have made some efforts to try and shore up their earnings a bit. Delta had been generally a stronger one, so it's going to be a really important test for earnings to see if they can hold up the $35. But they're not actually just looking for the stock to hold up. They need a rally.
They have a higher flash.
And I think, to your point, crude oil is the story here, but it's more of what American had to say, where they basically shocked the street, slashed earnings guidance, and effectively said, we are impacted by this, but we're mainly impacted because we can't increase prices right now.
Oh, for sure, a higher flash.
The demand's not there for increased prices. So it was sort of that disinflationary
21 million on a buying with 1.5, 1.4.
Business of Delta, because they have to buy crude oil and buy jet fuel.
Getting disgusting.
But the consumer isn't actually seeing that cost being passed on. And so that, I think, is what's really, really dampened the rallies in these names. And then, of course, there's still the what seems like 2-year-old story of, is there going to be slowdown? Is there not going to be slowdown?
Sure.
And oftentimes this is one of those places where that battle takes place.
My kind of gut thing, because you've kind of think about this a lot too.
In
previous companies guide negatively. Are they trying to kind of set the stage for themselves, have low expectations? That's kind of how I felt with that American announcement. All right, let's talk Pepsi. Tomorrow morning earnings. Delta's on Thursday before the bell. Pepsi's
stop
tomorrow.
On the rest.
And we talked about the chart this morning with the chart master and Rick, and just how brutal it's been. What's this trade looking like?
Yeah, same style trade. Shorter term, though, just goes out to the end of this week. It's much smaller, but still notable because Pepsi has been so much in the spotlight with the earnings announcement, with sort of these dieting trends and the possible impacts to snacks. I think we're going to get a good answer to that. But I thought it was quite interesting because from a trading logic standpoint, there is so much negative surrounding this stock right now. Analysts are slashing price targets. The stocks come down like 30%. It's a consumer staple name. These aren't the type of moves you typically associate with those type of stocks. 170 calls being bought, 800 of them, 34-cent debit. The break even is 170.34 at the end of this week. Well, the market maker move in this stock is not $10. So the market maker move is closer to $5. It's 160 right now. They're going to need double the expected move, essentially, from options by the end of the week to break even.
Wow.
However, as we know, at least initially during these reactions, if a trader still has a little bit of time to expiration, if there's an outperformance in the direction that this trade would benefit, so to the upside in this case, outperformance of that $5, so $7 move, it's not all the way to 170. There's a chance that this could be, still higher initially after, but you only got till Friday for this. So at some point, this becomes very binary. It's either in the money or it's out of the money. 800 of them, though, $27,000. I just thought this was an interesting setup where it's, so much negativity, so much selling. Is this Nike 2.0 where all the narrative is negative and you just deliver lukewarm and you get a rally?
I mean, I kind of off camera when we were doing our chart master hit earlier this morning, kind of mouthed to you when Rick was doing the chart. Because it was like the sentiment here is one of the most negative sentiments I can recall on a global staple company in recent memory. You know, it's like it's wild how much the stock has broken down on some of this Ozempic fear and stuff.
Still aggressive though here. They're buying calls.
Yeah,
They're not
really
just selling puts, looking for maintaining of the value at this point. They're looking for a snapback.
Yeah, and it needs to happen ASAP. So it's actually probably more aggressive than the Delta trade.
They're all sort of the same, but I think anytime your time horizon is 4 or 5 days, you're pretty aggressive.
You need a hit. Yeah, okay. Last one, ARM. Shares have been stuck basically in the same range.
It seems like every single analyst on the street weighed in this morning, kind of led to some volatility in the stock, I would say. Mostly, I think that the trading has been healthy in this name after those first 2 days of sort of working out the pricing. It's been a pretty stable name, relatively range bound. Put that into the context of the market itself has been quite volatile. So I think it's been pretty good to see, especially compared to something like Instacart.
Dude, Space has done 5 flights so far.
2,000 of the same expiration as Pepsi. So
That's
this Friday,
awesome.
56 calls for a 70
Didn't we
cent
see like
debit.
the second one?
A little bit bigger trade than Pepsi. $140,000.
It's amazing. They're doing one a month.
Max loss on this one. 56.70 is the break even. They don't need nearly as big of a move, but they don't have an earnings announcement or something to get that catalyst in a hurry. So in that sense, it does make a little bit more sense. That's a little bit less aggressive, but still a big trade. 2,000 of these, 70-cent debit, $140,000, and it does need, let's call it, nearly a 5% rally by the end of the week.
Okay, wow, some aggressive traders here you spotted in today's session. But when you got markets coming back from red early and a pretty sizable swing at one point, almost 1% down, to see us come all the way back. And ARM, though, just kind of riding the wave of the current of the market, not doing anything really exciting since the IPO. Thanks, Alex. Appreciate the trades. All right, a lot of bulls out there in the market. When we come back, let's talk energy and commodities with Chris Robinson, taking a look at the crude oil move in some detail and look at the chart.
Oh, I've left the table. Forgot. That's good. There you go. Yes, boy. Yes, boy. Next horizontal support, man. It's just finding support on each of those levels. Not want to break out of this channel, which is kind of bullish. Close another one there.
Then obviously with what happened Saturday, we gapped open higher. So that's the next thing to watch, right? Are we going to go fill that gap in crude oil? The gap's from about 83 and a quarter up to about 84.70. Chart traders being what they are, they like to go fill gaps. So that's a possibility.
Oh, there you go. There you go.
You know,
That needed to happen.
You know, we're going hour to hour with obviously the situation as it is now. But
Confirm that this is not the bulls building liquidity.
Level. Why is that a big deal? You know, it's another 38% retracement. We look at that kind of stuff all the time.
Didn't think it was. I mean, we had the tapering,
it's also,
but gotta be careful.
You know, an area where we've had congestion. So when people don't know what to do,
See if we
they
get to
lean towards
VWAP.
the technicals.
Be sick.
Lots of times it makes absolutely no sense, but after been doing this for 35 years,
Hold these
I say
last
that
two
a lot
till
about a
VWAP.
lot of commodity markets. So people are nervous. I don't care if you're bullish or bearish. I don't care if you're a producer or you're an end user. You're worried about where crude oil is going to be a week from now.
Yeah, WTI is still holding that trend up off the lows, right? I mean, we can still draw a line connecting us to the bottom. So, I mean, this bounce kind of happens magically just in time to keep the trend in place.
Well, I mean, I think it's interesting. You know, we were at kind of key lows. You know, people were concerned that we were going to roll over and go sub 80. I think this, you know, what happened over the weekend, you know, obviously is, you know, put a bid in on the crude oil market for, you know, obviously a bad reason politically. And if you're, you know, concerned about the state of the world, but it has put a bid back into crude oil, and we're going to see if that extends. Larger picture, at the end of the day, it's going to be supply and demand. It's going to be what's going to happen with the U.S. economy. You know, we just survived Friday's unemployment report, right? So we were gyrating around there. And we were actually, you know, we'd had a pretty decent pullback in a lot of the products. I trade a lot of diesel fuel with clients of mine, and we had a really nice pullback, and a lot of end users, farmers and stuff that I work with were like, oh, this might be an opportunity. So, but we went to bed Friday night. Nobody knew this was going to happen.
AMC new high there,
so
5.5.
Again, we're kind of chasing these technicals until further notice, unfortunately. And anybody out there, you know, technicals are great, but it's very, very hard. And when it's kind of like you're in a dark room and you've got 3 candles. That's what technicals are like. They always look really good. They always look really good 20 minutes later. But in the heat of the battle, you know, they attract attention. So we'll see. True. Obviously, $90 is going to be big. Round numbers, that it gets people talking about, you know, how high can crude oil go. And this is a time, I think, where you need to be hedged if you have a lot of risk.
Maybe a message to the airlines, too, as some lack of hedging perhaps on the mind of investors is just selling those stocks off hand over fist today. Hey, let's talk natty gas, Chris, because I know you watch the whole spectrum of energy, and arguably this might be a more interesting move because it's got some sustainability, it seems, behind it. After the gap up earlier late last month, rather, the thing's been running pretty much all October now. It's only a week, but what's going on here?
Well, we're up at 10-month highs, almost 1 year high. We're back to where we were the beginning of the year. And we had gone down to, you know, around that 2 cent level. There was, you know, historically, that's pretty cheap natural gas. People kind of forgotten about the fact that, you know, winter is coming, right? And it is. It's coming to Europe. There's some uncertainty, of course. Is it going to be a cold winter or not? So you throw those all together, and percentage-wise, natty gas has had a pretty big pop. But it took quite a long time. And this, again, a lot of it was driven most recently by what happened over the weekend. There's obviously concerns about, you know, supply issues if there is a very, very cold winter. So throw it all together, we're back up, you know, north of 3 cents. That's becomes a self-fulfilling prophecy too. You've got people that are adding to that long position if they were trying to build one down there. So very, very technical. Can we go? I mean, just, you know, a year and a half ago or so, we were, you know, up above 10, right at $10.
10 minutes.
You know, so how I can recover, I don't know.
Wow, it happened fast.
It's actually not even a bad. It's a good hedge. It's
also gotta
good
stop on their last two.
If you think that there's going to be more uncertainty,
I don't think we're going to make VWAP.
Means higher prices. So you've seen some money going into that trade. It's funny, you had money going on the long side there, even as crude oil.
I should review my trades.
Until, Friday, you know, we have been trending
almost $10
lower. So
on
that
AMC.
was something that people have been looked at. When you have a market diverge from,
yeah, just trade on my secondary account today,
like that gets people's
which
attention. So we'll see. The market's telling.
Change it up a little bit because that's only trading with tomorrow's contracts. And I'm slower getting out of. Need to get hotkeys for my Thinkorswim, and even on TD I'm not very fast. Let's look at what we got here. Alright. 1028 is my first trade. I deleted a lot of the lines from earlier. Just accidentally won that hand. We lost to a bot. Still gonna have these puts on here though, so I need to pay some attention. Pull up on the other screen. Here we are. Key 1028. Right here. Right here. Right there. Break of this channel. Yeah, it's right here. Break of that channel. Making a head and shoulders. And yeah, that's pretty much it. Picked up 5 puts. Tomorrow's 428s. Sold one at 1036. Right here. Sold the rest. Oh, I stopped out of the rest. Weird. Did they happen? Oh, I canceled. I had put a stop and then I canceled it. Okay, closed another one. 1049. Right here. So, bottom of this channel. Like that exit. It's beautiful. Then put a stop on the rest. I got stopped out of the rest. Yeah, I had this weird melt up. It's kind of strange. Stopped out of the rest at 1055. I stop out of those? Yeah, so I didn't make much profit on that. Weird that there's the same price here as it was where I opened it. Yeah. Only took one. I guess I could have taken another one. Next trade was puts again at 1107. Picked up 5. So got back into puts after the stop out. This was the bad trade. I remember this trade. This was a knee-jerk reaction. I wasn't. So my stop loss on it would be up here, top of the channel. Yet I opened it up here, and I didn't stop it where I should have because I wanted to give it time to move. So yeah, anyways, should have gotten out of it quick. Got 5 puts there. Closed them for a loss. Up here, right here on this break. Then got calls on that break shortly after 1128. Wait, what? 1128. Oh yeah, right here. Not the greatest fill, like somewhere here. 1128 got 5 calls. Sold one at 1134. Right here. Sold one at 1136. Right here. And then stopped out of the last 3. Break even at 1141. So right there. And then I was back into calls at 11:51. So building this inverse head and shoulders, still above that channel, still bullish. I just didn't like my entry here, so it's fine to stop out of it. So back into calls there, 5 of them, 429s. Sold one at 11:56. There. Sold another one at 12. Right here. Just stop and then canceled it. Then actually bought 5 more. I was averaging into it because that channel break was pretty big. Pretty big deal. Given I was kind of thinking the market would be kind of choppy today. Like the market's actually rallying into close. I think the market might be kind of choppy today, so wasn't expecting a big continuation. I thought about that after I opened this. Let's see. 12:15, got 5 more. Right here, picked up 5 more. I had lines drawn in there, no reason for it. Oh yeah, little consolidation there. It was an aggressive buy. There wasn't much of a pullback. Okay, I'm just gonna close this. And then had a stop that I canceled. Sold one at 12:31. Right here. Oh yeah, it sold off. It bounced and I started selling them then. Wasn't sure. Sold one there. I think some of these are for a small loss. One for small profit. Sold another one there. Sold another one at 12:32. Sold one at 12:33. And then sold the rest at 12:33. That might have been I don't know. Slightly profitable. And then 12:33 I bought puts. I was right into puts there. The head and shoulders, yeah, remember that? Head and shoulders and a break of this channel. So it was a fine trade, I just didn't take profits on this one. Bought 5 puts. And I liked the setup enough that I got 5 more then, shortly after. At 12:35. Then bought 5 more at 12:40. Right here, bought 5 more. And then I sold 5, 12:51. So yeah, sold 5 back up here. Sucked. And then I sold 10. Oh, I sold 10 there too. So I didn't wait for that retest. Dang, I thought I did. If I waited for this exit, that would have been a nice trade. If I took profit here and did a stop loss, that would have been the best. However, waiting for some pullback, but little inverse head and shoulders got me shook. Then I bought 5 puts, 12:53. Oh yeah, I got back into it. That's right, I closed it and I'm like, wait, I shouldn't do that. I immediately regretted the decision, so I got right back into it. Then I got 5 more, 12:57, yeah. I was still bearish on it. I wasn't thinking we were going to bounce here. I just thought this was bounce and still a downtrend. So a bit of over trading in the noon hours, the chop, 5 more there. And then sold all 10 of them at 115. Yeah, took a loss on this one too. Dang. Oh, one there, right there. And yeah, then we broke that channel to the upside and I was into calls. Bought 5 calls at 125. Wish I bought way more. It just happened so quickly. That was just kind of instinct. Bought 5 here. And that was all I could get for that upside. Couldn't buy more. Just felt like I was chasing too much. And then slowly scaled out of these, which saved the account on the day. But it wasn't down too much. Sold one here. Sold one here. Could have waited longer to sell them, I suppose. Oh, these are at the highs of the day, actually. That's why I sold them. Different highs, different markers. Sold one here. Sold one here, yeah. Wish I held these longer, of course. And the last one, remember I sold it because I wanted to make sure my account was green on the day. That was my concern. There's the bell, so 149. Sold the last one right here. So could have of course held that longer. Then puts was early on it, of course. 5 puts at 231. Right here on that channel break. Sold one at 237. Right here. That was a smart sell, bottom of that channel. Or actually, there's that support right there, horizontal support. Bought a put back at 257. Bought that put right back 257. Right here. So yeah, I like that one as well because it was rejecting this resistance, and this resistance was confirming the aggressive uptrend was starting to roll over. Again, we got to the end of the day and I only profited a little bit on it, but it worked out. Sold one at 313. Right here on this support. Sold one. Sold one at 337. Right here. This support. Canceled my stop loss. Sold one at 344. This support. Rallied into close here, and I have a stop for the last two. Break even. Which might just close out now. No, I'll wait. I'll wait. Because the other day, I gotta give myself the whole 15 minutes. Sometimes there's news after hours. Wait a minute. Oh, this isn't on a good till can. What the heck? Is it's not on a day? Wait a minute. Shoot. This is just day. It doesn't count extended hours? Shoot. Alright, I'm taking a little loss on these. I think. This price is right. What? Oh, never mind. It filled. Filled at 131. Oh, it jumped over my stop. That's annoying how it does that. So I guess it did stop me out. Better than where it is now. Alright. Stopped at the end. So, green on the day. Tomorrow we'll have buying power back in our trading account. Not bad, not bad. Small day, but happy with the gains. Could have been bigger. All these trades were slowly getting bigger until this break, and it was like I just took a small position for some reason. Again, it was fast, and I don't know. I didn't want to go that big. That was too quick to sell. It really was too quick to sell. I gotta sit on my hands sometimes. However, you don't know. I kind of assumed it'd be choppy, and I was still selling at resistances, so makes sense. Sold one there. And then I think extended hours was my other triggers. Yeah, some extended hour lines. So not too bad. Hold it on the way up. I like it. I like it. Thanks guys for your support today. Appreciate it. Tony T, thanks for the donations, man. Hopefully you'll be a multi-millionaire if you're not already. With your barbecue position, you can come donate and support me. Have a good day, Kitty. Thanks, man. Thanks, Guts. Appreciate it. You guys had a good Happy Money Monday. GME, let's see, GM. GME ended up today 2%. SPY's up 0.64. Rallying here after hours a little bit. Dead cat bounce, definitely engaged. Gap fill coming. However, we do have big data this week. Tomorrow, wholesale inventories, and then Wednesday's PPI, Thursday's initial jobless claims, and CPI. So, a lot of movers. Thanks, Psych You Up. Patient, lovely people. Same to you, sir. Appreciate it, guys. Thanks for the support. Thanks for your likes. 17. Well done. All right, we'll see you guys tomorrow. Love up, like up, comment down. Happy money sticks around.